Good morning. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is a beautiful Wednesday in Myrtle Beach. It's Wednesday, the 8th of November. We've got the Fed speaking today, Powell. We've got a few others speaking later in the day. Let's see. We have Barr at 2 p.m. Barr is more of a financial speaker, or more financially oriented than the others, more so than the others. I know they're Fed governors. They should understand finance and Fed dot plots and stuff, but Barr is by far one of the better ones to keep an eye on. It was kind of like Bullard when he was on. Powell speaks at 9:15, so he's starting to speak right now. Okay. Williams speaks at 1:40, and Jefferson speaks at 4:45. All right, just watching the markets at the moment. A lot of blocks, all right, for the bid. Very interesting what I'm seeing right here. Okay, already this morning. All right, let me just get this up and running here. Pre-market. Okay. I want you to note the block trades here. Okay, I'm about to present. Okay. How much time we got? We got 13 minutes to go. 13 minutes. Okay, note the blocks in the far left. Note the blocks in the far left. Those are at the bid. And we got prices moving higher. All right, so that looks pretty good. Good morning, everyone. Okay, so Amazon looks good. What's Tesla look like? Tesla. Looks like Amazon's going to keep going here. Okay. Okay, so Amazon's moving pre-market. Okay, here is Amazon going into the open. We have quite a few blocks on the bid going into the open. Amazon. Okay, there you go. Here's Amazon. Okay, look at the bids. Okay, so we have bids at 142.71, 360, Microsoft 360. Let's see what Microsoft looks like. Amazon looks good though. Microsoft, moving higher. You know how much I've been talking about Microsoft lately. We got 10 minutes to go for the opening bell. 10 minutes to go. Okay, let me get Woody up and running. All righty. Good morning, everyone. Eight minutes to go. Make sure if you like credit spreads, make sure you check the charts that I uploaded to the trading room this morning. There's quite a few Disney, AMC, ACRS, number of stocks that look good. Roblox, if you took a trade on Roblox for earnings, that stock is up. Roblox is trading up $6.40 at 41.50. It closed right around 35.07, sorry. The 36 call was very active yesterday. Rivian is higher, trying to push through 19. That was very active too. The 19 strike, I think it was like 32,000 contracts. In one block. And it's like 55,000 contracts at the 19 strike on Rivian. A lot of positive talk about Rivian and also Tesla with its $26,000 model. That's probably going to get critical mass. Microsoft. Let's keep an eye on Amazon. Amazon. Okay, we got 6 minutes to go. 6 minutes to go. Just having some difficulties with Thinkorswim. That's all squared away now. Okay, we got a couple of stocks that look pretty interesting this morning. We got some selling on Lilly. We've got Biogen higher, Synopsys, SNPS, Teva Pharmaceuticals, and SAP. Those are all higher. Seeing some bullish volume in large caps. Also in Ralph Lauren. Make sure you check out Ralph Lauren. Okay. Okay, Barr. Powell speaking. Okay, Powell speaking. Market's pulling back a bit. Okay, be taking some profits off on Roblox right at the open. Roblox. Okay, there's Roblox. Nice pop. We've got less than 4 minutes to go. All right, Amazon's fading from the highs. Powell speaking. Okay, you want to take some profits off the table on Roblox. Intel on the move. Intel on the move. Okay, 2 minutes, 2-minute warning. First 15 minutes, I'm not doing much of anything except taking profits off the table, reassessing the markets after 9:40, 9:45, looking for stocks with high relative volume. And upward sloping VWAP for bullish trades, downward sloping VWAP for bearish trades. Looking for catalysts to move stocks, looking for stocks that are in play. Okay, Intel pushing a bit higher. Intel's trying to go. Intel bidding it up, trying to get through 39. Okay, less than a minute to go. Less than a minute to go. Okay. Nice bounce. Roblox not open yet. Options not open yet. Okay, Rivian, watching Rivian. S&P gapping up. Schwab did a little sneaky right there, trying to get me to close my order. All right, so that was a nice trade there on Roblox. If you took it, I'm out of Roblox. Out of Rivian, out of Roblox. Okay, so that was a pretty interesting trade. Roblox and Rivian, out of both of those. Nice profit. Okay, ACRS, looking to take a trade on ACRS. Okay, looking for the bounce. S&P's going. Apple. What's Tesla doing? Tesla. There goes Apple. Nice move on Apple. Okay, I'm out of Apple into strength. Tesla looking good. Okay, that looks good. All right. So FANG stocks look good. Okay, I have Friday calls on Apple. I'm going to take some of these off. Okay, so a couple of days ago, many people were thinking that Apple was going to pull back. ACR, Roblox looking good. Roblox, ACRS. There's a number of stocks. Disney's one that looks good. Nice little bounce. Okay, the ACRS trade above. All right, ACRS. I took that credit spread, but I bumped it up. All right, got some selling. Looking for Doji, another Doji. All right, Roblox. What do you look like, Roblox? All right, so let's see. Amazon pulled back a little bit. Powell still speaking. Okay. Looking for a bounce.
My recommendation for them would be to take the tipping screen and just remove that, unless it's like at a sit-down restaurant, because I don't appreciate the special.
The tipping everywhere, everywhere. At the dry cleaners, there's tipping options.
All right, so we got 1-day implied volatility is 0.69%. 0.69%. That tells you that's going to be a pretty narrow range. VIX is lower. We've got positive gamma. Positive gamma means that we are in an area where price action will most likely contract into smaller ranges, not huge ranges when we're below the zero gamma area. When we're below zero gamma, then we start to pick up volatility. Volatility expands. We have bigger ranges. When we're above the zero gamma level, like we are right now, we're in a positive gamma state, and therefore we look for tighter price action, similar to what we saw Monday and Tuesday. Just waiting for the opening range at this point. Cassava Sciences starting to move cassava. Hold on one second. I got to get this. That was my sister. She says hello.
Somebody saying to take profits, it's kind of like, it's a little bit disappointing. I'm not saying to sell it, of course, but get out, take profits. Kind of suggests there's not a lot of confidence going forward on this. How about Roblox, Jeff? Up 15% this morning. Got a big winner there. And
all right, Amazon pulling back quite a bit here.
Sell-off, and then just used it as a platform to bounce now.
Yeah, quite a report here. Earnings per share beat with a loss of 45 cents versus the 52 cents expected. That was up 10% year over year. If we look at the bookings, those rose 20%, coming in 839.5 million. That beat analyst expectations. Average booking per active user was flat year over year at $11.96, but daily active users rose 20% to an average of 70.2 million. That was also above analyst expectations.
All right, Dell looks okay.
16 billion hours in Q2. That was up 20% year over year. And the company did not provide guidance. They don't expect to until 2024, but they did say, CFO said that they slowed spending growth across most of their major expense categories, which has led to margin improvement on sequential and year over year basis. They've also talked a little bit about some of the operating expenses, some of the capex, and generating more operating leverage and free cash flow. So some good numbers, some good commentary as well.
All right. Let's see here.
This just seems like the gem of the company. I've always frankly kind of thought this about Roblox. Kind of surprised at how much the market punished them. And they're still stuck, between 30 and
Okay, let's see what is working at the moment.
we'll have to see if kind of proves out the stickiness of the
To start the day.
it does seem like from a
Okay, S&P 500, take two, DaVita. Wow, these are all up pretty nice, gapping up. So earnings are turning out to be a lot better than anticipated. Axon, that was on the watch list, I believe. Axon was on the extended watch list. AXON, Axon, I believe they had earnings, right? Kellogg, CF Industries, okay, fertilizers, maybe those get in play soon. All right, so all right, so SPY trying to push a bit higher. All right, S&P. Just watching the stocks that are on the move. Let's check out the NASDAQ 100. That'll give us a good sense of direction. Presently, NASDAQ 100 is mostly green. It's about 40% red, 60% green. We're being led by some of the security names, Zscaler, Fortinet. Okay, note the
binge watch the market with Schwab Network. 24 hours a day, 7 days a week on SchwabNetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
All right.
Big sell-offs here. One of them, Warner Bros. Discovery, HBO Max, down double digits. That Disney coming out. Talk to streaming, just trading. That's online. Here we go.
All right. So Gen Electric, I mentioned yesterday. Gen Electric.
Thoughts on the stocks. Let's start with what we've got, Paul, with Discovery down 15%, almost down to year low. Where's the pain coming from here? Can we chalking it up to strikes and the labor stuff?
I mean, if you're looking at their revenues, they had, a bump in theatrical and gaming. They had Barbie, so they got the Barbie bump this last quarter. They're not obviously getting it today in the marketplace. But when you look at earnings, worse than expected, but they are generating free cash flow, and that's sort of the good news here is that since the merger, they've paid down about $12 million in debt. I was on the call this morning.
All right, so we've got quite a few NDX 100 top 30. All right, so I just posted the NDX top 30. Check out those stocks. You can see that Intuit, Fortinet, Zscaler, among others, are pushing higher. Where's CrowdStrike? CrowdStrike is halfway down the list. CrowdStrike. Let's see. Fortinet was looking good, though. I mean, let's take a look at some of these. Fortinet, I believe, was lower on earnings, right? Fortinet. Okay, starting to move higher. So Fortinet looking pretty good. Zscaler looks good. CrowdStrike. Okay, Gen Electric. I just mentioned Gen Electric. They have. I didn't realize the Gen Electric. Let me see here. Gen Electric. Gen. Let me just show you what they do. Gen Electric. Not General Electric. Gen. Jen. Gen. Gen Digital. Oh, shoot. Gen Digital. Sorry. Nope, not now. All right, Gen Digital. Okay, so Gen Digital is a lot about security. Some of their brands, ABG. You can see here, ABG, Norton, Avast, LifeLock, Avara, ABG, Norton Defender, CC Cleaner. So they have quite a few. They have quite a few products. I didn't realize. I didn't realize that this company had so much going on. So just keep that in mind. Okay, Gen Digital got a nice upgrade. So presently I have calls. I have January 20th. Gen Digital. Okay, let me take a look at Gen on the daily. All right, you can see Gen on the daily chart, what I'm looking at. Look at the volume. Look at the live screen volume here. All right, MACD stochastics rising, RSI rising. So worst case scenario, we sit here and don't do much. I might sell some bull put spreads on this too. So what I've been doing, I do this all the time. I just don't talk about it a lot. Some of you asked me to talk more about, the spreads that I take, etc. So a bull put credit spread could be taken on this particular stock, Gen. All right. So the idea would be I want to sell maybe the 1850 or the 19 and buy the 18 put for protection. And you get a credit. The credit, um, what the hell is this now? What does that say? All right. Everybody's calling me. All right. So the credit, provided that the stock continues to move higher, you collect the credit. As long as it stays above, your put that you sell. Okay. Now, in addition to a credit spread, I might also take a long, whether it's shares, maybe I buy some shares and sell some covered calls. There's a lot of ways to trade this on the long side. You could also look at the weekly time frame, and potentially sell an iron condor where you would do something similar to the credit spread, but you do a credit spread below and a credit spread above 21, for example, below the lows here. So there's a lot of ways to do that. So I posted some ideas this morning. All right, looks good. All right, so Gen Digital looks good. Gen Digital. Let me see what kind of good thing is in a boring market, you can have some really nice premium. Just collect the premium, and wait for the markets to just do what they've been doing. Move away from price, especially in the case of bull put credit spreads or put credit spreads. All right, so Microsoft showing up as a potential candidate for 1117. All right, so we're pulling back from the high. Expecting price action to stay in a narrow range again. Look at Microsoft just kind of getting smaller and smaller. Look at the candles getting smaller, smaller, smaller. You can feel the momentum leaking out. It's kind of like when you shoot one of those model rockets up in the air. It'll start to slow before it actually changes direction. You follow? So you shoot that model rocket up in the air, and because of gravity, eventually momentum slows so much that it just falls right out of the sky or parachute, whatever. What the hell is he talking about? Just the momentum here. You can see these candles getting smaller, smaller, smaller as it approaches 366. So I'm expecting that maybe Microsoft will create this cup and a handle in the next few days. All right, Microsoft, NVIDIA. I posted an article last night in the social channel about NVIDIA, and I was very surprised that Elon and his AI adventure, XAI, purchased thousands, the word was thousands of NVIDIA's processors. Now, they can't be the only one, right? So if Elon with his product, his XAI, playing catch up with Chat GBT and Microsoft and Google, is buying thousands of processors, what do you think the rest of the competitors are doing? I got a feeling Nvidia is going to blow out earnings again. I'm not betting on it right now. I'm going to keep an eye on more analysis, do a little bit more analysis, but yeah, looks pretty good for NVIDIA and competitors. All right, so we have about 60% of the NASDAQ 100 are green, about 40% are red. So that's telling me to keep an eye on these stocks like Match.com, Fortinet, IDEX Pharmaceuticals, IDXX, Intuit, Synopsys, Amgen, Adobe, Zscaler. That's the top 10, along with NVIDIA. AMD. All right, let me look at AMD here. AMD. Sectors. About 60% of sectors are green. A couple are unchanged. And about 30% are red at the moment. All right, utilities were higher yesterday. That's lower. IBB was higher yesterday, lower. Retail was higher yesterday, lower. Looks like transports are leading. Transports, technology, pharmaceuticals, and builders. Top sectors to trade. Transports, looking pretty strong. Transports. Sectors in play today. Mm-hmm. Mm-hmm.
About 83 and just about 98 to the upside that this stock can trade in. You know exactly what your risk is going into this $30 per spread. It can expand. The idea is you want to go as close to 90 as you can, but at the same time, you still got a decent range outside of that 90 strike over the next few days here in expiration for this stock to trade. So really inexpensive way to play. If you're more bearish, maybe you do a put calendar to the downside, but this is an example using that one standard deviation move that the option was priced in. All right.
Okay, sectors in play. You got transports this morning. Okay, ARM. What's ARM doing? I hear him talking about ARM. Okay, ARM has earnings, right? Microsoft. Okay, some of these stocks look a little extended over the last week and a half. Apple clearing some resistance levels at 182 and change. Apple. You guys take profits on Apple? Okay, we're a little bit lower than where we started the day. We popped up to about 183.25. Okay, FANG stocks look mixed at the moment, so I would just chill. AMD. All right, so
Tune in 24 hours a day, 7 days a week at SwabNetwork.com and on all your favorite streaming services. Swab Network, available anytime, anywhere, on any device. It's free.
Gen Digital looking good. Markets little fade. Not expecting much. Okay, Merck is trying to push above 105. Pharmaceuticals.
with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Okay, let's see what J&J looks like. J&J. Merck. You know I like Merck. Merck.
Wrap up the trading day with me, Oliver Rennick, with biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Okay, Merck. I plan on selling some cover calls. I have shares looking for higher. All right, so you're looking at in phase. In phase. Okay, flat at the moment. Okay, Merck looking for push higher. Starting to move. Notice all of the wicks. Okay, we got this big bullish candle the third week of October. You got the reversal, then a big bullish candle. Price action just kind of moves sideways, doesn't do much. Notice all the wicks underneath these candles, though. That's buyers at the low. So it looks like somebody is building a position. Volume suggests perhaps there's some institutional interest. We're off the highs. The highs were 118.05. About 12 points below that. Let's see, Merck. Let me just check something real quick. Merck. Yeah, there's no hurry to do anything, by the way. No hurry.
Closing the week out on a positive note here. So not a lot of conviction, not a lot of energy. Weakness in the Russell is a bit of a standout here, but that's been a theme that we've been watching for a while. You mentioned we're kind of chopping around with that. I have to agree. Holding above the 50, holding above the 200-day moving average in the S&Ps, the NASDAQ, and the Dow. The Russell small cap's the only one of the four majors that's below both of those key levels. Okay. So you mentioned stocks for just a second here. Some of the more interesting moves have been in crude oil, the drop off there. And then I think, too, that gold's rally kind of got stopped out sort of abruptly. Let's talk crude first. Any news that we need to be aware of here over the next 24 hours? Well, we're going to have the inventories here a little bit later on this morning. We had a large build in the API yesterday, a 12 million barrel build. That's a significant build. And Oliver, basically, with China disappointing expectations, you're seeing crude prices come off. Rates at these elevated levels, the impact that can have on demand. And then,
all right, we're starting to bounce. SPY starting to bounce. S&P right at support, 43.80. 43.50. Below that. And several other layers. Okay, so it's pretty slow going this morning.
European Central Bank, keep in mind, last month cut its rate for the first time after 15, for the first time in 15 months, I should say. But if you remember earlier in the week, we were talking about the RBA, which after pausing, well, I should say, I'm sorry, the ECB, I said left rates unchanged. I said cut, I'm sorry, for the first time in 15
Yeah, it's beautiful in Myrtle Beach. It's about 65 degrees and sunny.
25 basis point rate hike after pausing. So are we starting to see that situation where central bankers are feeling it to what the IMF warned, that inflation is becoming more deeply entrenched? To that point, crude oil hanging out around 676.
71. 71 now. Was 65 earlier. All right, nice little bounce. All right, let's take a look at the S&P real quick. Some of you asking me, what do I think the markets are going to do? Well, just by the appearances of the implied move for the day, we're about 0.69%. So that's very narrow compared to what we've seen in recent past when markets were moving lower. We were at like 0.9%, almost a 1% move intraday. And right now, let's take a look. Let's take a look.
Gold as well seems to be having a little resistance around 2000. I'm looking at commodities coming off here. Gold recently stalling out again. A bit of a disappointment for the gold, but in many ways, much like the indices, kind of a win at current levels.
Got too many charts on here. I got to get rid of some of these. All right, so we're up against this trend line. 4,400 is a major level. If we get above 4,400, that would be huge. All right, so let me just adjust this. 4,400 is the resistance level for now. 4,400. Note where RSI is. Okay, RSI looks very strong. MACD looks very strong. Stochastics looks very strong. So it's the option positioning that we need to pay attention to. But looking for a narrow range. We're above the 50-day, above the 200-day, above the 9, above the 21-day. Looks pretty good. Let's go look at the number of stocks trading above their 50-day. Let's look at this first. Growth and value are both moving higher, so that's good. Value's been consolidating, but growth continues. That looks good. So tech stocks, the tech sector is doing pretty good today. So if you're thinking about trading, think about in the tech sector. Number of stocks trading above the 50-day. All right, we're getting a little hook upward. All right, so previous hooks, like this one right here in the last vertical, you see that? We have a little push down, a little flag, and then a pop higher the first week of June. You see that? Same thing with the number of stocks above the 200-day in June. Take that vertical. That's where that occurs, okay? When the number of stocks trading above the 50-day flag like it is right now in June, what happened? Markets went off to basically took off to the races. So we need to get through this October high rather, that first and second week of October. If we can get through there and options continue to move and populate at higher strikes further out in time, we should see a nice rally into the seasonally strongest months of the year. You know what our plan is? We're looking for the second half of November into December to be profitable. Looking for institutions, looking for the evidence the institutions are active. So that looks pretty good. Number of stocks above the 50-day. Let's take a look at advanced decline percent. That's going to tell us if there's more advancers than decliners. Okay, so yesterday we had a hook in the NASDAQ, watching that. Okay, so S&P is starting to turn. You see that in the top panel, S&P starting to turn. And so is mid caps. You can see mid caps at 6.1%. Small caps, not yet. Okay, small caps, not yet. So looking at small caps, I have a iron condor on IWM. I'm basically looking for IWM to stay between these strikes. Okay, I have the 160, 155 on the put side and 195, 200 on the call side. So all I'm looking for is price to stay inside of this range. Okay. So looking for prices to move back up towards 180. And I have until December for that to happen. I collect the entire premium if we stay between. And that's the plan for now. So all right, so that's IWM. NYSE, let's see what's going on. Breadth looks good. Volume looks good there. McClellan volume oscillator. High, low. Okay, we're back down below zero line. So there is some selling. We've got the number of stocks. We got up volume was leading. Now it's down volume leading 1.5 and 1.2 on the NYSE and the NASDAQ respectively. Looking for tick cumulative to turn up while we're bouncing around and just consolidating. Nothing to do at the moment. Okay, so that looks good. Let's look at what's working today. All right, so what's working? Yesterday, real estate was off, so was materials. So those are getting bought today. Tech still looks good. Intel's off a little after being higher earlier. Micron is off. IBM looks good. Okay, let's go take a look at IBM. A lot of people probably not paying attention to IBM. IBM following through, looks good. Microsoft, Meta, the FANG stocks look good. They're just sideways at the moment. Okay, Apple hanging out at the highs. There's talk about Apple, I forget who it was, talking about acquisitions. Now's the time for them to be more aggressive. It might have been Brad Gershner, actually. Looking at Microsoft, if Apple were to acquire ESPN, that'd be a huge, a huge deal there. Apple. Okay, Meta pulling back. All right, the FANG stocks are saying no go at the moment. Rivian pulling back. Okay, let me take a look at Rivian. Rivian, if you took a trade on Rivian, that was up. Now it's down. So taking profits first 15 minutes, that's why we do it. This is how we do it. All right, so first 15 minutes, okay, taking profits on Rivian, not sticking around to find out if it's going to stay. Roadblock, same thing, taking profits into strength. If it does pick up a base at higher prices, we'll see it. Okay. I don't know if you saw this. I was talking about it. I was talking about what is strong this morning. I don't think you were seeing this. Okay. Real estate, materials. All right. Tech looks good. So tech still good. Tech, software. All right. Zscaler was looking good this morning. Zscaler. All right. It's up against resistance. So if it does break above 178, you got a pretty good long setup. Fortinet had gapped down. CrowdStrike is pushing higher. So the markets feel a little extended after a week of buying from Monday and Tuesday last week into this week. Now we're just sitting here and moving sideways. So I wouldn't be in a big hurry to do anything. We need to pop above 440. 440 is near-term resistance. So basically, I'm just sitting here watching what's going to go. What is going to go? Intel dipped. That was looking pretty good pre-market. Didn't do much. Roblox is hanging in there. Let me see what Roblox reported. RBLX, Roblox. Okay, Roblox reported a loss of 45 cents versus a loss of 51 estimated. So they beat by 6 cents. They lost 6 cents less than what was estimated. And Roblox is higher. So for now, it looks pretty good. All right, KD. KD has earnings this morning. New York Times reported. All right, they beat by almost 10 cents, 8 cents. New York Times. Let's see what the New York Times looks like. NYT. I don't like the politics or the publication, but it's bullish. Probably starts doing better into the election year next year. Okay, looking at Appel's 3 MACD setup. Okay, Gerald Appel, the person who, the creator of MACD, the creator of MACD used 3 time frames. One for a short time frame for weekly entries, for normal entry the 1226, and then for longer term entries 1939. So when you get this last one, 1939 to turn MACD, that's a buy signal on a longer time frame. Now I wouldn't buy right here at the high of the day, but I would be looking for a breakout of this trend. Okay, so a break above 45, 25.25, 45.50 would be significant, and perhaps moving back towards the 50s on this one. Not particularly fond of New York Times, but it's a stock. It could make 10% from here or more. Sell cover. There would be a candidate for selling covered calls, I would imagine. Okay, stocks are extended. Not feeling the juice today. Okay, let's see what Apple's doing. Apple. Apple sideways. Microsoft. Snowflake. All the FANG stocks are drifting lower. Okay, Tesla. Looking for a bounce. All the FANG stocks saying chill.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Let's bring in the Chief Financial Officer, check out the latest report. Michael Potter, CFO of Corsair, ticker CRSR, trading about 1160, close to the lows from a couple of years ago. Michael, welcome back to the show. Thanks for being here this morning. Thanks for having me back, Oliver. Okay, so tell me about the report here. The thing that stands out to me is you guys seem to be on the bottom line, kind of vacillating between a loss and a gain. There's been a few quarters over the last few where you guys have seen both. An adjusted basis, you made money. On an unadjusted basis, you lost about a few cents per share. Why is that happening?
Well, we had a pretty solid report in range with what we were expecting and what the analysts were expecting as well.
All right, FANG stocks are chilling. That's telling you to take a break. We had a nice day after midday yesterday. We do have a narrow range that we should respect at the moment. Let me just go. Where am I here? Okay. Let me go there. Okay, S&P. Okay, you can see where we are. So we got to get above 4,400. That's resistance for now. We've had a nice, 8 days? 8 days higher. Actually, these dips this morning might be a buying opportunity. We have to keep an eye on these FANG stocks. Apple's holding up the best. Broadcom is up 390. Nvidia is up 258. Netflix is up 60 cents, not doing much. Flat VWAP. Home Depot What do you have on Home Depot, Money Magic, as far as options? Let's see what Home Depot looks like. Home Depot looks pretty good. Nice flag. Home Depot. Let's see what the implied vol looks like on Home Depot. All right, looking at Home Depot from a credit spread, put credit spread. Let's see. We're trading 295. Let's say. Let's try the 295. Sell the 295. 295 put. Sell the 295 put for Friday. And it's no for 2 days. 2-day trade. Maybe this works. And buy the 290. 290. Credit 60 cents or $60 per contract. $65 max profit per contract. Maybe we can do a little better than that. 295. Let's see what the 295s implied vol is 20%. So can't do a credit spread. Credit spread on Home Depot is not worth it. Implied vol is only 20%. So maybe shares for now. Cassava's on the move. Cassava's on the move. Sava's on the move. Cassava's on the move. Okay, looks good. What's Bitcoin doing? Bitcoin pulling back to 35, 35K. Cassava. All right, cassava. Just hanging out at 200 day. If it does push off of this, look for some volume. Okay, who is moving here? Biogen, Synopsys, SNPS. Yesterday, saw a lot of volume. Synopsys, Teva Pharmaceuticals, Teva. Okay, Doji. All right. SAP. That one had some volume yesterday too. Gapping up. CLAC, KLAC. Okay. And Kellogg. Kellogg. All right. Fade on Kellogg. Ralph Lauren. Saw some activity this morning. Mid cap stocks range bound. Melco Crown, MLCO. We did see some movement in some of these casino stocks like Las Vegas Sands and Wynn. Both of those had some volume. Expedia, Expedia, still looking good. What about hotels? HLT, Hilton. Looks pretty slow today so far.
All right, thanks for the details. Appreciate the explanation, Mike. Thank you. Chief Financial Officer at Wholesale Gaming, CRSR. Trying to hold on to multi-year lows right now after selling off post earnings.
Okay. Let's see. Small caps. All right. Saw LZ with some activity this morning. That gapped up. Oh, notice that these stocks are fading. So people are taking profits very quickly. Or notice all the wicks. Notice the wicks on top of your candles. So far, few blocks equal no conviction. All right, so look at your favorite stocks. Notice the wicks on the top of the candles. That's telling you what kind of market we're dealing with right now. Okay, so it looks like traders are not sticking around long. They're just taking profits. Okay, so until we see that conviction, expect more of the same. All right, let's go take a look at some other indicators. All right, let's look at some of these. This is the S&P 500 EXR. Notice the wick. Take two. No wick, but it faded from the high. Gapped up. That's why it's a black candle. It gapped up to 147 and change. And then right now it's at 145. So it's off $2.60 at the moment from the high. So they've been selling on take two. Yesterday, Electronic Arts was busy. Electronic Arts, let's take a look at Electronic Arts. Probably on the back of Roblox, which is holding up pretty well. All right. Very little wick on the top of this candle. All right. So you should be noticing these things. If not, I'll point them out. You don't have to worry about everything or be concerned about everything. But that's what I'm seeing. I'm seeing wicks on a lot of these candles. Okay. JKHY, black candle, gap up to 157.50, and now is trading at 148.79. So people are taking profits. They're not sticking around. Axon, look at the wicks. American Airlines, all right, that's pretty solid. American Airlines looking pretty good. AAL Airlines. Okay, airlines might actually be getting a bid here. So that's early. All right, let's take a look at USO. Crude oil should be moving lower. All right, crude oil moving lower.
great fundamental picture. So, if we would have asked Kevin, I would have said, oh, well, the stock came in at good about
USO.
so I guess it wasn't fully baked in. What do you see technically here?
All right. So if you're thinking about trades, make sure you check out the airlines because right now they look pretty good. They're all turning. Ooh, that looks good. Expect Joe Terranova and people on CNBC halftime report to talk about airlines. All right, these appear to be in play. Alaska Air. Okay, that's turning the corner. These look pretty good. Maybe some in the money. January, February calls. Airlines. All right, so maybe you buy some in the money calls, like say the 33 or the 32, and buy say January or February. Look for 36. Let me see what those look like. Airlines. Let me see what what is this? Alaska Air, ALK. What is January? January's pretty cheap. Pretty cheap. The 35 call, I'd probably go 32.50. Those are $3.20. A little bit of slippage, about 10 cents either side. Let's see what American Airlines look like. American AAL. American. Okay, so the in the money call on American for January is $1. The $12 strike is in the money. Let's see what implied vol looks like. It's probably not that high, I would think. AAL, American Airlines. American Airlines looks pretty good. Let's see. The $12 call. $12 call is implied vol is 42.82. So that's pretty good. That's not bad. Looks pretty good for I like the $10 strike. The $10 strike is deeper in the money. American Airlines. Let's see. American. What about a credit spread? Credit spread. Okay, so buy a put. Let's say the 11. Let's say the 10. Buy the 10. No, that's pretty cheap. Buy the 10 for, let's say December. 10 December. What? All right, so I like your American Airlines. January in the money, 10, 11. American Airlines, I like what I'm seeing here. Okay, I'm about to post something on StockTwits or on Twitter, so if you're thinking about a trade, I'll wait a few minutes.
So the very short term last couple days have been pretty good to try and fight for the upper end of the channel low. I thought was still
Yeah, easy. New York Times, yeah, it's got a double top. Yeah, it's got to get through that level first. But it is moving higher, so I'm just watching it. It's okay. You don't have to apologize. Mhm. Occidental Petroleum. Okay, you're looking at Oxy. Okay, Oxy, OXY. Okay. Let me go check. Crude oil. All right, crude. Okay, NIMO. I'm looking at the TTM squeeze on SPY. We do have a cyan bar. We're above. Looking for that. Looking for that squeeze. We hit the anchored VWAP going back to October last year. Anchored VWAP is at 416.30. Currently trading 436.80. All right, so $20 above that level. That was a nice area to bounce. I'm talking about the SPY. And anchor VWAP goes all the way back to October 13th of 2022. We hit 416. We're now $20 above that level at 436.66. Looking pretty good. We're at standard deviation 1. Anchored VWAP band, standard deviation 1. Standard deviation 2 is up there near 460. Can we see 460 by the end of the year? That'd be kind of cool. Let's see. Crude oil. Crude oil whoa, crude oil is at 75. Holy crap. What the hell happened to crude oil? All right, so airlines is a good bet. Airlines. Trading 75.96. Two weeks ago, crude oil was $96 a barrel. Wow, that's impressive. Nice trade on RCL, by the way. Yeah, I saw your Live Nation trade too. That was a good idea. Wow, look at frickin' crude oil. I just can't believe it's seven. I was expecting it to be in the 80s, not 75. That's pretty wild. Okay, American. In the money calls, I took some $10 calls for AAL. Took the 10s, January 10 call with I'll take 75-cent stop. Filled. I got filled at 254. Crude dumpeth. Airlines are probably going to cruise higher, folks. So this is a pretty good deal for you. Don't bet the farm, but definitely nice. Definitely a nice catch there. Mhm. All right, I'm going to post this on StockTwits on Twitter too, so people see it. Get behind us if they're interested.
Accelerate your market knowledge and shift your perspective into cold view. Real-time example trades in full hour of trading. I'm Tom White. I'm Kevin Nick. Catch me on Fast Market. Weekdays at noon on the Swap. Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Swap Network. Big drop at Upstart. Jenny, tell us about what happened there.
You know what's amazing about this story, Oliver, is I had to check my platform like 3 times to make sure I'm seeing this correctly, because even with this monster downside, and it should still
All right, so either it works or it doesn't.
$1 a share. I mean, this thing trades with volatility. So I think this third quarter speaks to some of the weakness we're seeing in the lending and overall funding space, as a lot of their would-be borrowers are backing away from loans with these high interest rates. But third quarter revenue did miss expectations. That was also down 14% on a year-over-year basis. Fee revenue fell 18%. Third quarter earnings were a loss of share, actually, excuse me, of 5 cents versus the 2-cent expected losses. So losses worse than expected. And they said that their lending partners did originate around 114,000 loans across their platform in the quarter. That was down 34% from a year ago. So that's majorly concerning, because that's loan demand, not funding, that is becoming a major snag on their overall operation. The conversion on labor costs was 9.5% in the quarter. That was down from around 9.7% in the same period a year ago. And the CEO did highlight they are making this rapid progress on becoming the world's first and best AI lending platform. But they prefer to be growing operating in a more conservative mode. However, I was reading what the analysts thought about this, because I think
You could do a credit. You could do a bull debit spread as well. Buy the 10s or the 12s and sell something further out. They're pretty cheap though, $250. Not bad. All right, right now I'm just watching the markets. A lot of stocks with wicks up high, telling me there's a lot of tepid or timid traders. People taking profits first 15 minutes, like we did with Roblox and Rivian. Rivian was a good idea. In hindsight, the Rivian dropped off. I'm not sure what Rivian is doing right now. Let's take a look. Rivian, maybe a buyer step up if they like the company comments. Nope, they're not stepping up yet. That didn't look good. Wow. You don't have to go balls to the wall every single day. I don't think there's a reason for taking on a lot of risk right now. All right, so looking for a nice follow through. Okay, so Rivian looks pretty ugly. Roblox, this is what I was hoping to see on Rivian. What's Tesla doing? Tesla, a little bounce there. So Tesla lately has been dipping in the morning and then taking off to the upside after. You can see what it did yesterday. And here's the dip on Monday. Dips, bounces, and then dropped off. So looking for Tesla to continue or watching Tesla. Okay, no big deal if it does. The markets don't move every single day. Apple hanging in there. Um, looks pretty good actually. Apple, Bitcoin, Nvidia. I really like that article I posted in the social channel. I posted an article. CNBC did a little 5-6 paragraph summary of Elon's next venture, XAI, buying, quote, thousands, not hundreds, but thousands of NVIDIA processors. All right, so he's just one entrepreneur, one business leader, one competitor in the AI space that's buying thousands of NVIDIA processors. Can't wait to see NVIDIA earnings. SPY pulling back a little bit right now.
That's great for the bears. But if we see just the opposite happen, we're going to see some better action for the bulls. Yeah, I like the chart. As yesterday we got
Gen Digital.
to the point of the chart there, the S&P hasn't quite done that yet. Is it a matter of time, George? I mean, NASDAQ kind of getting above some key levels compared to the October highs. Big Tech trying to lead the way. Market cap math says our analysis doesn't really have to go much further than that. For sure.
Okay, Gen Digital.
Well, I think if you look at the S&P, it's actually at where it was back in October, actually mid-October. So 3 weeks, we basically haven't gained any ground. I mean, just look at the market in the past 7 trading days, it's been higher, at least the S&P 500. So we're basically seeing the impacts of a low probability, high impact.
Tesla.
And again,
Markets are lethargic this morning. Very few blocks. Okay, there's only, what do we got here? 1, 2, 3, 4, 5, 6, 7, 8 blocks on the IWM. 8 on IWM. 1, 2, 3, 4, 5, 6 on the Qs. 8, 6, and SPY is 1, 2, 3, 1, 2, 3, 4, 5. 8, 6, and 5. 8, 6, and 5. IWM, Qs, and SPY. There's very little conviction in the market right now from institutions.
The normal here, I guess, also has to include normal interest rates, though. But bond sell-off is slow here, Scott. So it seems like that helps. We transitioned from like a crash, spiking into kind of a moderate stair step. Yeah, which is a necessary, right? I mean, that moderate stair step approach that we're seeing into actually kind of adds to that soft landing narrative. And here we're seeing that. So you're 100% accurate on that. We'll see how it continues to go. All things are kind of listening right now to the Fed. How are they going to sound this week? We already know what's coming up in our upcoming session, but around the speak, is it going to be bearish? Is it going to be hawkish? Is it going to be dovish? We're going to be listening to those kinds of things this week. Is going to retire at the end of the next year. George, the Fed speakers seem to all be pretty much in line. We're not getting a very wide range of commentary like we've had at a few moments over the last few years. Does that suggest that they are truly done? Well, I'm just going to use the measure of the market. If you just look at going back to September's meeting, there was no adjustment in federal funds futures for another additional rate hike this year, and even going forward, there isn't. So, I'm just going to use the market as our guidepost. The Fed is going to follow the market. That's what they've been doing. I think the Fed is relatively measured in how they, of course, talk about increasing rates or not increasing rates. I think they're in a good position right now. I think it's we could go, several months, even a couple quarters, where we don't see.
All right, not much going on.
Rates, all else equal, the economy, of course, continues to expand.
Tesla,
It should consider
S&P.
6.5%, 7.5%, somewhere in that range of fiscal deficits. It's pretty large. So it's hard to actually, say we're moving into recession. We have such.
If you were thinking about taking a break and maybe playing golf today or whatever, not a bad idea. The markets, you can see VWAP is starting to flatten out, that dark blue line. So looking for prices to bounce off of support, 43.76, somewhere in this area. Late yesterday, we had this little dip and we bounced, looking for a move back up into the range and another doji day. Okay, so looking for another doji. Okay, another doji, spinning top. Not surprising with the implied move for the week, or the implied move for today at 0.69%. That's usually about 0.9 or 1.1%. On bearish days, we're above a bullish or above zero gamma, so we've got a positive gamma state. But there is a lack of puts below, so that's one issue that we need to deal with. We need more puts to fill in underneath and more calls higher in price, like say 44.50 on the S&P and higher, 4,500. Let's go take a look at gamma real quick. Okay. Let's see. Yesterday at the close. Okay, so yesterday, this is what yesterday. All right, you can see where we closed, 43.78. The put wall is down there at 4,000. The volatility trigger is 43.45, so we want to stay above 43.45 for sure. 43.45. Okay, 43.45, 43.71. Well, we're well above that, 43.45. Okay, let me just add that, 43.45. 45. All right. And we're going to call that 43.45. Text vol trigger. We want to stay above that. 43.45. Okay, so that's where we are right now. Extended 7-8 days higher, and looking for maybe it gives back some. Maybe we give back some. Maybe you're thinking about some puts or whatever. All right, what's Tesla doing? Tesla just chopping around.
Broadcasting 24/7 from our studios in Chicago and from the heart of Wall Street, the New York Stock Exchange. Up to the minute market insights, example trades, and stock-specific analysis featuring the smartest minds in the business.
Watch, keep an eye on VWAP. If VWAP starts to flatten out, look for price to move back up towards VWAP.
Available anytime, anywhere, on any device for free. Schwab Network, empowering every investor in
trading every market day. It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffee. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Oh boy, hope everyone's having a good day. All right, Apple's up $6. Up $6. We started to notice a reason to get long Apple on the 3rd. That's Friday. We started to move into the gap on Friday. I'm not trying to, sound pompous that I was right. It's just that price action is right. Price action is right on Apple and hanging in there. All right. So it's not about my call on Apple. It's about what price action is doing at the moment. Okay. So if you look at Apple on Friday, we liked the idea of a gap fill. Okay, so let's look at Apple. Apple. Let me go to Apple's chart. A lot of times I'll be asked by people on the street, or when I say street, I mean like social media, what do you think is going to happen with Apple? And I always say, watch price, watch what price is doing. And, you get kind of a feeling that people are like, why don't you just tell me what you think price is going to do? Well, given RSI is rising, okay. All right. So given price is rising and RSI is as well, we broke above this descending trend line. Now, a lot of people will use this, Trader Stewie and HCPG and many other people, Options Hawk and others. They look at the same thing. They're looking at price action. They're looking at how options are trading. And on Friday last week, we got that gap. And we were looking for price to fill that gap. All right. So on Thursday, we had that high. That was the last time we touched that trend line. We pulled back on Friday. And then on Monday, we pushed through, breaking on through to the other side, as Jim would say. Followed through yesterday. And now we got a doji right at 182.34. We know where Money Magic's levels are. Yeah, exactly, Grover. Nothing much to do. All right. So anyway, so Apple, just looking forward to continue. Maybe it takes a break and flags right here. Maybe it flags here. But this is what I was looking at. This is what I was looking at on Friday. So if you look at that note, we were looking for the gap to fill over there on the left of that Apple chart. That was the 3rd, November 3rd. And since then, we've managed this nice follow through. RSI is rising. MACD and stochastics are both bullish. Volume tells you the institutions have been buying after earnings and before. So price is telling me what to do. My opinion doesn't matter. Bullish pattern. everything you want to see. Price action right now is holding up very well on Apple. Okay, price action holding up very well. It's up on the day. We're up 97 cents. Flat VWAP. Do I expect a big move on Apple? No, you can see the 182.50 call wall. We're above that. And I believe the next one is Apple. The next one is 185. So 185, if we do manage to get any kind of trend on Apple and you're buying down here today looking for a follow through, it's kind of a dead day. So not very aggressive. Tesla's starting to turn here. Watch Tesla. Tesla's starting to turn. Here's Apple. Tesla's starting to turn. Watch Tesla. Might get something going. Okay, turning up towards VWAP. It dipped in the morning. Looks like it might be heading higher. All right, Tesla, you got 225. That's the upper call wall, 225. Let me put that on here. 225. All right. Call wall. 225. And then 230. Okay, above. Okay, so 225. Coordinates 225. You should always have these on your chart, by the way. That way you don't have to think about it. You know exactly where to look. Okay, 225, 215, 215 as the put wall, 215, put wall, support. Oops. 215, put wall, support. Two 15 put wall.
So we'll see what kind of narrative comes out of it. It should be more on the dovish side.
Okay, 215, 215. Let's be consistent. Add the decimals and below. Where'd that go? Oh, there it is. Okay. There it is. So we got $10 in either direction for Tesla. Do we get a follow through? Right now, SPY's saying nope. S&P. So this is Tesla for now. Pretty slow day, not much to do. Tesla. All right, I'm going to take a couple minute break. I'll be right back.
Well, 52-week new highs is very bullish, and there isn't a lot of narrative. Microsoft is at an all-time high. This is the second biggest weighted stock in the index. This is one of those seven that are going to lift up the market on its shoulders, just like Apple, which has broken out of its intermediate downtrend and is poised to do what? Make all-time highs. This is the kind of leadership you want to see. You want to see technology leading, and the story isn't really getting magnified because there's so many other things to focus on. But that new high list, it's diversifying. You see Hilton at all-time new highs. Okay, but the travel leisure sector is under some pressure. The cream is really leading right now, and when you see Microsoft, Apple, ServiceNow, Adobe on that leaderboard, Cardinal Health, these are stocks that are just impressive to see. Even CBOE, the exchanges, they're starting to turn around,
and CBOE and CME on their way to new 52-week highs as well.
Okay, so you like some of these tech names, you like, and you're bullish on the ones particularly a name like a Microsoft. That's a bullish sign when you're hitting new all-time highs. Walmart, Target, Home Depot. Target, you said trying to find the floor, looks compelling. Walmart is a name you like, right? Tell me about these names.
Yeah, well, we're going to next week, and Walmart, one of those stocks on the 52-week high list. This is impressive. Now, what hasn't followed the leadership? Target, Home Depot. They report next week, and one of the things we talk about endlessly is how is the consumer spending? Are they still resilient? We're going to get that peek into it right before holiday season next week.
All right, I'm going to grab some coffee. I'll be right back.
Stocks have stopped going down, and we're starting to see some bases. Home Depot looks like it could be forming, and now this is a stretch, an inverted head and shoulders, which is a positive formation. I wouldn't call it just yet, but it has a lot to reverse, still under its 200-day moving average. At Target, they were under a lot of pressure for different reasons, and now it's finally stopped going down. We're seeing some signs of life. It's breaking back above the 50-day moving average. It has a lot to reverse. So anything positive out of Target, you can see the stock really just have a mean reversion, and you're going to have a 10% gain right there. So this is what intrigues me, and then we're going to hear about that holiday season. We're going to hear about the health of the consumer and how spending habits have continued to remain pretty resilient in struggling times.
As we may snap the recent winning streaks, right? The S&P and Dow up 8 days in a row. This would be the 8th day. The NASDAQ would be going to the 9th day in a row. But, I mean, the trend has been higher. Do you think between now and year-end?
All right. Occasionally, you should get away from your computer, take a 10-minute break, refresh your brain, have a fresh look when you come back, grab a cup of coffee, cup of tea, whatever, a cuppa, as the Brits like to say.
You would think there would be a little more volatility. If this was a bear market, we'd see the pullbacks come back quickly. We're not seeing it. What is the catalyst to take us down? We just got through earnings season, so it's not going to be that. We have those seasonal headwinds. Money managers are going to have to chase performance. And what are they going to do? They're going to pile into the names that, one, have underperformed and could get a little bit of a lift. And then
Uber with buyers stepping up at the low of the day. Uber.
So I think the seasonal trends will help us lift. Right now, we have a little resistance, 4390, 4400 in the S&P. I don't know if we'll get to all-time or 52-week highs in the S&P 500, but we're going to take a run at it, and it's going to probably happen in the next 6
All right, eBay looking pretty bullish. eBay after a gap down, you got buyers stepping up. Charter Communications, nope.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a meter. Other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me always put people before me. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me.
There's no place like the New York Stock Exchange. We got you covered. The biggest stocks, the biggest trends, all the market news. The watch list with me, Nicole Cavalini, 2 p.m. Eastern on Club Network. A fresh take on the hottest trends in the market, from every click to every tip.
With no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only Schwab Network.
Wrap up the trading day with me, Oliver Bennett, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better.
VS. No, that's not what I'm looking for.
tomorrow at 12 p.m. Eastern on the Swap Network.
Welcome back to Trading 360. I'm Nicole Petalini, live at the New York Stock Exchange. Time for the big three. Three stocks, three charts, three trades. I'd like to try to take us to the charts here. Take us to the trading. John Kaufman, co-founder of Dale Trade. Great to see you both. John, just a big picture on this market. Obviously, we've had a incredible run, our longest winning streak in a couple of years. What say you? Because we're just searching for direction here. We had some catalysts, like a soft jobs market. We had, there was a short squeeze on bonds. There were a few things that sort of helped to move stocks higher, but now what?
Yeah, so we're going to be incredible.
With the conversation about VFS, or that Vietnamese EV maker, the Vietnamese EV maker, VFS is on the move. I'm watching that one. Volume coming in. All right, this is VFS. That was an IPO that ran up to 93, changing direction now. Chewy, you're looking at Chewy? Yeah, Chewy looks really good.
Show you where we are, because I was talking about these areas of consolidation as they're separated by these areas of vertical type tendencies or price activity. Here you can see three areas of value that formed at higher levels in this instance, so trend up, value moving higher on a 5-minute time frame. But what I wanted to show you is that the lower extreme of this range that we're in right now.
All right, that would be a nice credit spread if IB is high enough.
Again, if you're trying to participate with the trade or trend, I should say, looking for tradable areas where the market provides opportunity to get involved.
Chewy, don't forget the holidays and spending.
Rally off this back to 571, opens the door for 573. So you're either buying into this trend up at the lower extreme of the range here, or in a breakout type trade above 575, where Don mentioned we'd see some energy if he thought we could take that level out. I want to show you what's going on. Similar pattern here, right? Trend up, and this is a little bit more time on this chart. We're going all the way back to the beginning of April because we've got 4-hour candles here. And again, a similar situation playing out here. I just wanted to show you what's going on, Nicole, as far as the areas of value. 3 of them on this chart at higher and higher levels. And again, a longer term chart, so we're kind of broadening our scope here a bit. But you can see in this this instance, we're bouncing around 555. You can also see right back up to these key areas here, this upper extreme, very bullish pattern here right now, looking for follow-through, looking for a breakout. Lastly, I want to show you what's going on here with this longer-term chart here, because this is a similar situation. You take a look here. I mean, you can see we've been range bound, 600 to 400, hanging out above the daily pivot of 500. But look at this. This really says it all in terms of that trend. We're going all the way back to, again, 2020 here. 3 areas, the same situation playing out. And again, the call very much bullish across the board here.
Understood. I mean, and you do have JP Morgan maintaining that overweight on Costco. They did lower the price target to 605, but it shows that they too are, at least they are still positive on that one. We see some clapping going on behind me. That is good such just wanted to get a final thought there, Don, on Costco.
Yeah, no, in general, again, things need to be a little bullish right off the bat over here, but I do love my.
All right, choppy price action. I really like Chewy.
U.S. Virgin Islands. And we don't have Costco here. The second I get off that island, I am off and running to a couple of Costco chickens.
I can't get over that. That's amazing. I can't get over that. You're on the island and you've got Costco chicken. Okay, let's talk about Starbucks. Another name. And you know, a lot of this is all based on what the consumer is willing to spend. Your thoughts on Starbucks now?
Yeah, that's exactly my point on Starbucks is the consumer starting to finally fade a little bit here. So there's been a lot of consumer trends lately, everything from credit card debt, which has actually slowed a little bit. We have to look at student loan repayments and so forth. But there's a lot of reasons right now not to buy into this large bullish move after earnings inside of Starbucks. I am what we term fading.
All right, so we're chopping around. VIX is at 1474.
Selling the 95 puts, again, another $5 wide spread. This one is done, though, for a 95-cent debit. It's a cheap shot to the outside, looking for Starbucks to actually kind of retrace lower. Again, coming off that kind of wild gap to the upside, I think there's going to be a nice fade in this marketplace.
It does, make sense. Some folks like to fade that run up, especially when they have a gap higher like that. It's a pretty decent move up. And what do you think when you look at this chart then?
Well, I think short was the right way to position yourself if you're trading Starbucks prior to this big move up. And let me show you why. This chart behind me here, despite we've seen invalidated that working assumption. Let's begin first and foremost with the run-up. Price activity since, which is a form of acceptance. You got a consolidation into the earnings report. You get that big move up, green candles, vertical move, high conviction to the upside, higher highs and higher lows. And then you can see we kind of pause for a moment Thursday, and then again kind of regain that move up here. A very well-defined staircase pattern to the upside. This is a bullish pattern that's playing out. This move up, and if anything, I would call it acceptance of the breakout we saw in reaction to earnings. High conviction trade, sideways consolidation, currently forming, and we're really kind of going to find to come on this one. So
All right, I'm just looking at Chewy, potential trades on Chewy. We sell the 20. Sell the 20 and buy the 19. That's a credit, $37 per contract. $30 per contract.
Consolidation were forming at lower and lower levels, and as these areas are forming at lower and lower levels, we're constantly referencing the prior area relative to the one that we're currently forming. So into October,
all right, SPY continues to pull back. Chewy looks pretty good.
take out 96, take out 100, and we're right back to some key areas here that we saw back in July, again up around 106. But the bear trend, in my opinion, no longer a valid one up in 396. And I show you the cold live, very much leaning on the bull side of things here as well. That's because of this longer-term trend that you can see going all the way back to a top in July of last year. Areas of consolidation that formed higher and higher levels. And look what just happened with that move up. We looked at through 102 here right now to Cole, through the pivot, and ultimately, let me bring a little bit more room into this and opens up the door for a retest this upward swing that we saw back up around 115, 120 back in March of this year. So very much good momentum to the upside, supportive of this longer move, this trend up that we're seeing here.
Yeah, Chewy looks pretty good. Just looking through. All right.
But now it has become invalidated. No longer likes that concept. Final thoughts on this one on Starbucks.
Yeah, Starbucks, again, in my opinion, just caught the bullish wave with their earnings announcement. Their earnings announcement just coincided with a massive move to the upside. They caught that wave, and I do believe this stock is going to fade here in the very near term. And again, under 100 is downright horrendous and bearish in the months to come.
All right, I see Wedbush on the 6 has a neutral 106 target, so that's worth noting. XLF, if you take a look at this one and you do think about these financials and this sort of wild rate environment, your thoughts here? I mean, obviously, we've seen a little bit of a run-up of late.
Yeah, the first thing I'd like to say about the financials is, well, this sector is still down on the year. And it's a critical aspect to point out that, one of your largest sectors is still effectively down in the year where the S&Ps are up about 15%. That's why I keep saying, it's all about tech, it's all about tech. But in the trade inside the financials, I'm absolutely bearish. I mean, look at the move that we just saw in the financials. Basically straight up.
All right. Looking at a bull credit spread on bull put credit spread on Chewy. Looking at selling the 20s and buying the 1750s for December 15th. Looking for Chewy to continue to move higher. If I get filled and this starts to move, that's going to give me $80 credit per contract. I might buy some shares and sell some covered calls, something like that, just to double the move here if it gets moving. All right, so SPY right now is just chopping around. Oh, did he? Cool.
Push back on this one again, Nicole. It is positive, in my opinion, at least over the very short term. Now, I can understand Don's bearishness when I look at the daily candle chart. But
all right, Royal Caribbean. Yeah, all those look good. Royal Caribbean. I really like what I'm seeing on Chewy. Very nice looking chart. Earnings as well. Actual came in at 37 cents, beat by 8 cents. All right, Chewy. Looks good. Chewy looks good. All right, so I like the Chewy bull put credit spread. Looking at the 20s, selling the 20s, buying the 1750s. Chewy.
swing reaction to short term, very similar to picture high conviction. Balance farming, we're seeing 30%
Chewy looks good. All right, Tesla, what are you doing, Tesla? Tesla's pushing through VWAP. Watch Tesla. Thank you, acceleration. Yeah. All right, let me look at RCL and CCL. RCL. My mom's going on a vacation with my sister in December. They're going down to the Caribbean. I love Royal Caribbean. That's like the best freaking floating palace. I just like to see the S&P get out of this range-bound action Monday, Tuesday, Wednesday. It could have been worse. We could have pulled back not dramatically, pulled back into like say 236 or 382 into the last week's price action. All right, so what that looks like. Okay, so let's go to actually, let's look at Hinkanashi. So we got our first red 60-minute candle up here at the high S&P for today. Looking more bearish. All right, VIX just a little wick down. I don't know what that was all about. Okay, watching the S&P, Tesla sideways. Really need Tesla to perform and get above 227. Notice the 215 put wall is down below and the 225 call wall is overhead. We're right in the middle. Watch Tesla. Tesla on the move. All right, we continue to move higher. Okay, I took a bull put credit spread, Chewy. December 15th, 12:15, 20 and 17.50. All right, so $80 per contract. With very limited risk.
So when you spin it forward now, your concern is about companies that burn a lot of cash. Some growth companies come out and they're not profitable in the beginning, but they give you this path to profitability. What's your warning to folks when they look at IPOs? We've had a lot of IPOs this year. We've had ARM, we've had so many here. Klaviyo, we have Kava, we have Kendi, just to name a few.
Okay, so Warren supposedly bought more Occidental Petroleum. All right, big range bound action. That would be a good iron condor candidate too. If you look at Occidental Petroleum on the weekly time frame, Oxy, Occidental Petroleum. So if you sold the 50, say the 55s, bought the 54s, and you sold the 68 call and bought the 69 or 70. So either a 1 or 2 point strike difference. Look for prices stay inside the range. Maybe a little bit higher, maybe 74, 70, 72, something like that. And look for prices stay in between. Collect the premium.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on your device. Schwab Network. Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Wrap up the trading day with me, Oliver Renner, for the biggest earnings.
All right. So markets are just chopping around. Tesla, looking for Tesla to continue pushing. Got a flat VWAP, so I'm expecting most stocks to stay near VWAP and not move much. Lack of momentum.
Welcome back to Trading 360. It's time for the disruptive short close scanning line. Taking a look at Akamai. Name on the move has been on the upside. Short selling.
Hey, Nicole. Yeah, I mean, Akamai is moving based on earnings and effectively.
Okay, Oxy looks good.
Guidance, which is actually reaffirmed by the company, but this is a legacy company in the content delivery network space. It's a leading provider. They're cloud-based. They basically provide computing content and, of course, content delivery for media, gaming, applications.
American Airlines just sitting here at the high. Look for that to follow through. Dell, looking for Dell to push higher. Dell.
Coming in around 965 million, higher by 9.5%. They actually denoted the security computing division, which is now about 61% of total sales. That division alone was higher year over year by 20%. So when you think about content delivery in the cloud, but also edge cloud computing, which is essentially a more rapid deployment of computing technologies.
All right, Dell. Dell also looking pretty good. Choppy, flat VWAP. In most stocks, Dell VWAP up and to the right. Let's see what Dell looks like on the videotape. Go to the videotape. Dell computer. 60-minute looks good. Dell continues to build higher highs and higher lows. Okay. Okay, so we flagged out. Now we're starting to see that should be green, not black.
So we're going to play the trend continuation, Nicole. It's basically breaching earlier today.
There we go.
Now,
I think the market will probably be a little bit soft, maybe in a trading range in the next week or two, as we try to absorb this phenomenal move we've had in the markets in the past week or so. But nonetheless, looking at the stock based upon hitting the new 52-week highs, and also based on guidance presented to the firm,
let's look at the daily.
so we're going to go out and buy the December with 30.
All right, Dell. All right, this is a Heikin-Ashi on the daily time frame. You can see that we continue to produce green candles. All right, looks pretty good. Little consolidation here. Building a handle, it looks like. I sold it, put credit spread on this one too. That expires on Friday. So theta kicking in. Theta is kicking in. VIX is dropping off here. Watch for a bounce in the S&P.
I remember when I first started flying, and we would experience turbulence. I would watch the flight attendants. They're not nervous, and I'm not nervous.
Mm-hmm.
I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through. I definitely feel privileged to be in that position.
VIX moving lower. Dell's starting to go. Watch Dell. Dell starting to move. Dell squeezy. All right, Tesla.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Remick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
All right, let's see. Clearfield, CLFD. Nice. Toast. 4 times regular volume on Toast. What's going on with Toast? Toast. It's down $2. Toast got toasted. Down 15%. Toast.
Rideshare growth was truly phenomenal, right? It was over 30%. I think the two concerning things were the food delivery growth was more around 10 to 15%, and compared to DoorDash was 29%.
Okay, Tesla just sitting here going nowhere. Tesla. Dell looking pretty decent. Dell. Chewy. BWAP up and to the right. American Airlines. Still hanging out at the highs. American. Okay, with crude oil moving lower, that's having an impact on those stocks. All right, more selling. Excuse me. The dollar continues its fade. So is the 10-year yield. So maybe it's the lack of conviction that's keeping prices from breaking higher, but I don't see the strength in the bond, the TLT, or excuse me, the 10-year that I saw in recent weeks. We're below the 50-day now. Okay. So that's a big deal. Not the same deal as it was when we were climbing. Below the 50-day, what's the dollar look like? Here's the 10-year yield. You can see we're below the 50-day. What's junk bonds look like? Junk bonds, we want junk bonds to be higher. Okay, junk bonds are just consolidating like an S&P mirroring what we're seeing on junk bonds, which are basically a flag. After a big run up last week, junk bonds are not fading. They're just range bound. We also want to see IWM and IBB higher, not lower. IBB. All right, so those two are off today. So junk bonds are flagging. IBB and IWM are lower. TLT below the 50-day. That's a big deal. The dollar. Let's look at the dollar. Currencies. We want to see the dollar fading too. The dollar. Okay. Survey says dollar's hanging in there, but you got a inverted hammer or shooting star. Shooting star usually is up at the highs, not inside price action. This is an inverted hammer. If we continue to move lower, back down to the magenta line, that's the 200-day, that would be bullish into year end. Okay. So that's good. What time is it? Okay, 11:53.
And that's because the game's over. And now it's about how to get the best profits. And I do agree AI can help both of these companies, but ultimately, a price war is not in the offing, I don't think.
Right. So Uber at $49 and change, is that a buy to Emil?
Good question. I have a lot of it myself, so I don't know if I'm buying more, but others, I think it is a buy. I think they're going to come out strong in Q1. They figured out the business model, so I feel good about this being a $50 stock in a year.
Look, I see a slew of buy forms.
10-year yields below the 50-day. That's a big deal. All right, so it looks like the bond market is anticipating that the Fed is done raising rates for now. They'll keep them high, but they're done raising rates for now. So that's bullish for equities. Every time I think of robo-taxis, I think about the Jetsons back in the day.
self-driving cars is not only the technology, but also the regulatory. Look what happened to Cruz in California after one accident. Just banned from the state. So it's going to be a decade before robo-taxis have a material.
It just sounds so funny. Robo taxis. Anybody take one of those? Anybody take one of those robo taxis? Can't imagine being in a car that doesn't have a driver. 10-year yield. Okay, 10-year. All right. So VIX, I know this must be kind of boring, right? Waiting for the markets after last week's trek higher. It's kind of a letdown this week to just be moving sideways, but it could be worse. We could be pulling back in price. Dare I say, pull back in price versus move sideways in a range. We can consolidate gains, the gains from 4,100 up to 4,400, basically, just rounding it up. We can consolidate one of two ways. We can move sideways in time, or we can pull back in price. Okay, 236, 382 Fibonacci, whatever. That would probably bring us back. Well, I was going to do that, by the way. I was going to add a Fibonacci on here. Recent run up. Okay, so here we are. There's our low. There's our high. Okay, so 382 would be at 42.84. Let's do 236. 236. Okay. And we pull this over a little bit. Okay. Let me get rid of some of this stuff. You know what all this is. Okay. Looks good. Okay, I'm going to pull this over here. It's 32% gain for the year from the November low. Okay, we don't need that there. Let's put it here. Okay. That looks good. We know where JP Morgan's long put position is. We got close to that a week and a half ago. RSI is still above 50 and moving sideways. All right, that's okay. 50.
instructions and option strategies in Take-Two Interactive, which is spiking higher into their earnings after the close. And ARM Holdings reports its first quarterly earnings since going public in September. And that Corey will break down consumer
Okay, so that looks good. So S&P,
which is slightly negative in 2023 their earnings after the close. Now 2.5 hours into the trading day, stock
VIX is still at 1481.
twice to extend its longest winning streak in about 2 years. The S&P 500 clinched its seventh straight positive session on Tuesday, while the Nasdaq 100 advanced for an eighth straight day. Those marked the longest winning streaks for the indexes since November of 2021.
All right, it's 12 o'clock. Looking for B and C pivots. A, high of the day.
I would say, yeah, I'm chasing, but I actually started buying Alphabet when it fell 10% on the
Okay, that's annoying.
earnings report, which I thought was actually very good. They grew earnings at 46% year over year and revenues at up 11% year over year. And 80% of their business advertising grew 9.4% and accelerated for the third straight quarter. I know we got all upset about cloud, but I'm not going to get upset with 23% year-over-year growth in cloud for them. Wasn't as great as some of their peers. Fine, I'll take it, and that's why the stock was weak. But I like the risk reward. So the fundamentals to me were quite strong. Meta we've talked about ad nauseum. I have owned it. I was trimming it because it had such a nice run. I mean, in retrospect, I really regret doing that because the fundamentals too are so strong. Right? They just put a double-digit total revenue growth of 23%, and they've got great product cycle story and the best operating margins in 2 years. So I feel comfortable buying these companies because the fundamentals are strong. We're going to talk about another one where the fundamentals weren't so strong that I've been adding to as well in cybersecurity, but I feel really good about.
All right, Tesla, what you doing, Tesla? Tesla,
I like the combination.
Tesla, little fade.
Those words today mark them down in stone from Stephanie Link. Because when she says that,
All right, she bought more Google. All right, Google had been basing for the last, 8 days, 9 days. Nice entry. She bought right around 121 in that area. Looks good. Nice volume. Institutions, Google. Awesome. Stephanie's good. Stephanie.
Stocks can drift higher by the cues. The concentrated performance year to date from mega cap will go parabolic by the end of the year. And if you think about the reasoning why, as a portfolio manager, strategically, you review your options and you say to yourself, tax loss harvesting occurs where? Everywhere except the mega caps. Buybacks over the next several weeks. Where will buyback intentions be the strongest in the mega caps? Where is there the lack of sensitivity to the cost of capital in the mega caps? So collectively, as a portfolio manager, you say to yourself as you reach toward the end of the year, if I have not been there, I need to be there to try and catch up performance as much as I possibly can. And please, that's not what I'm suggesting that you're doing, because you've been there, and you've been there for Meta very early. But for the rest, the majority of the portfolio management community, they need to be there. And these are the stocks that are going to give them the most significant weighting to try and recapture performance.
Now, Jimmy, I mentioned Tom Lee's note where he says stocks can drift higher by the cues. Maybe the most controversial part of his commentary today is that because he says cyclicals remain the most levered to easing financial conditions, rates coming down, by industrials, by discretionary, XLI, XLY. I posed the question yesterday and I'll pose it again. And I think Steph's commentary today and her additions to her portfolio are so telling. Why make it so difficult over the next 6 weeks? What are you going to do? You're going to buy a name like Caterpillar, for example, or are you going to buy a name like Alphabet? You're going to add to names like Meta or Nvidia, or are you going to buy a Deere or a Boeing? You know the point I'm making, not so specific to your own portfolio, but it's the broader point.
And it's a totally valid question, and it was in part answered by Steph and Joe. But I think there was something in your question, the way you phrased it, that I keyed in on even before you asked it, though.
is for the next 6 weeks. So, Joe, what you
At least, because
okay, but here's
the
where we're going to
economy.
differ.
Well, just because the calendar is going to turn to 24 doesn't mean all of a sudden the economy just decides, well, it's great again. It's in this slowing mode.
All right.
Which includes the next 6 weeks. Why not?
Okay, but here's where you and I are going to differ, and this is fine. This is what makes a market. I do think it's about the next 6 weeks. I think Joe kind of nailed it. It's about performance chasing again. And I'll also add it. This isn't about what Stephanie's moves are. That's not what we're saying there. But if you look at where this economy is, it is slowing, of course, from that 4.9% third quarter GDP. That was unsustainable. It was ridiculously high. It is, however, still quite strong by any measure. I mean, last we looked at the Atlanta Fed GDP yesterday. I think it was 2.3%, the estimate for this quarter, which is good. And if the Fed is done, I know it's a big if, but we'll get some confirmation or non-confirmation from it next week when we get CPI. If the Fed is done, that gives room for this economy to start to grow again in those cyclical sectors, in those sectors that you just mentioned, the industrials, the Deeres, the Boeings, the Caterpillars of the world. Now, let me be clear. I'm agreeing with Joe. For the next 6 weeks, I think it's going to be just, chase the things that have worked. But I want to point out one stat, courtesy of Strategas today. And it's just a fact, okay? If you take Apple and Microsoft, put them
All right, we're drifting lower.
6% of the S&P 500. On an absolute basis, that's extraordinarily high. If you look at any point that's going to come down, and I said,
All right, we got low ticks.
fundamentally, based on the economy, based on share prices, when the calendar turns, that's when those cyclicals should start to recover and should start to do well. But for the next 6 weeks, it is likely to be a performance chase for those concentrated names.
All right, all the FANG stocks are red, except for, looks like Netflix. Futures continue to pull back.
Breaking out of the consolidation range that we've had here over the last several days, what pulled us down? The Russell. The Russell is what pulled the entire market down. And I think I think we could say to ourselves, okay, for the next 6 weeks, mega caps and the strength of mega caps is the place that you want to be, and that's enough to support the market. I extended it. Okay, now if we extend it beyond the next 6 weeks, I do think we have an issue. But I think we've got concern because there has to be a point where the Russell stabilizes and we see some dispersion and begins to contribute to the performance we thought we had.
IWM? Yeah, sure. IWM. IWM. Point and figure. There we go. All right, so it looks like we got a 3-box reversal about to print at, if we make 168, that would be a 3-box reversal.
To you that a lot of companies beyond tech have put up even higher growth than 2 or 3%. And I think to your point about, is it easy just to own technology? It is for the next 6 weeks, but you still think there are pockets within industrials. I mean, did you see Parker Hannifin? Did you see Ingersoll Rand? Even Caterpillar bounced back after it saw it decline. There are opportunities. I think the consumer, we're going to talk about that in the next.
All right, we got support over here, 160, major support.
Why wouldn't you say that the pullback in the Russell and the overall market isn't an opportunity? Because I actually think it absolutely is.
I believe that the Russell will only find its bottom.
Apple, big pullback on Apple.
Not pulling forward the first rate cut from July to June, but when
Broadcom's okay. Tesla pulling back.
Q2 of 2024, because we disagree. Let me finish.
You want to be ahead of that, though, Joe. You know that.
We have a different strategy. We have a different way of looking at market stuff. I believe in breakouts. I believe in momentum. You're looking to try to identify value. So I'm looking at the Russell. I see the Russell as a falling knife. I see what you see in the long term. I don't think the Russell is going to continue the downtrend that it's in currently, because I think at some point the Federal Reserve has to react to the economic weakness that's building. And I think in 2024, we're talking about rate cuts. And once we have that strong degree of confidence that the rate cuts are coming,
then yes, I want to buy the
That's
Russell.
what I pointed to, the unit labor costs and the productivity numbers, because those were really positive surprises for the inflation picture.
Why would you want to buy the Russell though if we're arguably at the beginning stages, the earlier innings, if you will, of the slowdown in the economy? Why would you want to do it now?
I'm not saying buy the Russell. I'm saying buy other stocks that fall. If the Russell is the reason that we're selling off, and if the companies that just reported earnings sell off, well, that's an opportunity. So I think it's really all about stock picking, Scott. We can talk about all the names that I've been adding to since the earnings season, because I have a lot more conviction in the fundamental story and what the companies have said.
Sure, but look at where the action is. ServiceNow, for example, is on pace, Joe, for its 10th straight positive session. Adobe, its 8th straight. You see what Datadog did yesterday. I mean, that's where the action is. That's where the action continues to be.
I'm sorry. May I?
All right, we got shorts starting to cover. Shorts starting to cover.
3 trading days. Just 3 trading days. We would have said the exact opposite. We would have said small caps. We would have said cyclical.
No, we wouldn't have. We would have noted the fact that the small caps had an incredible week as the market bounced. But we may have in the same light said, is that sustainable in the kind of economic environment that we think we might be heading towards? And I bet many would have said not necessarily. And what's happened is it's now given back almost 3% of what it's gotten in the last week.
Your point is well made, and it allows me to highlight where the difference in my outlook is. Maybe to yours, Joe. You're talking about a slowdown. These stocks are priced for a recession. Okay, and I'm agreeing that the economy is going to slow down from the third quarter because that was ridiculously high. But as Steph just said, the consumer is strong. The consumer has remained strong as inflation continues to come down, and as it looks like the Fed is taking its foot off the brake, at least taking the foot off the brake, maybe not adding to the gas pedal. But that's a condition in which these stocks, small caps, value stocks, are priced for recession right now. And again, to Steph's point, a lot of them are showing good earnings growth. They're just not getting the respect.
I mean, at some point, stocks are rightly priced.
Okay, but not right now, not in the cyclicals and not in the small caps, here's the unless you really believe that there is a recession coming. Had a great debate with Steve yesterday, right? He is firmly in the camp that we're going to have a recession. Stephanie, others have said, we don't think there's a recession.
Why aren't you buying small cap stocks then today?
Well, first off, I mean, you know my positioning. I'm pretty fully invested, and I'm underweight technology
but you're
already.
underweight. You don't have what small cap stocks do you like that you have?
I think
don't have many.
That's right, but I think in this conversation, Scott, that we can equally say, or at least I'm trying to equally say that whether it's cyclicals or small caps, they are priced for a recession. That if, like me, you don't think a recession's coming, and you see this earning growth in both sectors, then you're very comfortable hanging on to those cyclicals, as I would be if I were in the small cap.
What's energy, Joe, priced at? Priced towards. We got oil at $75, or at least it hit below 76.
75.54 right now as we speak. Down once again, now well below its 200-day moving average. So doing what I expected.
All right. Tesla, QQQ.
In particular, in the futures market.
Hey, hold your thought. I hate to cut you off, but I have breaking news regarding Eli Lilly. Our health and pharma reporter, Angelica Peoples, joins us now with what we're learning here. Angelica?
Yeah, Scott. FDA is approving Eli Lilly's drug tirzepatide for obesity. Now, remember, that drug is already...
Eli Lilly? Okay, news.
...for diabetes. And now, today, FDA is saying that drug can be used for obesity, and it'll be sold under the brand name Zepbound. And remember, like Novo Nordisk's drug Wegovy, this drug is called a GLP-1, and this is a little bit different, and then it targets both GLP-1 and also GIP. And analysts see a huge opportunity here for this drug and Novo Nordisk Wegovy, and they're not really seeing a winner-take-all market here. There's just so much demand for these drugs. Lilly has said that they are ready. They are trying to increase capacity as fast as they can. Last week, telling analysts that they were on track to double manufacturing capacity by the end of this year. Back to you, Scott.
All right, Angelica, appreciate that very much. As we see those shares modestly rising, Joe, you own the stock.
Eli Lilly.
It's been expected to some degree if the stock's only up 1%.
It is. Stocks right now 608.5, approaching the 630 all-time high.
and I expected to get there. It's one of the reasons why at the end of October we went back into this stock. We had been in it. You know that we sold out of it. Is this the one you said on Friday or whatever it was the other day with Weiss? The chart looks great. Stock's going above 600, and he tried to suggest the stock didn't look good. And yes, I hope you're watching and or listening, Weiss.
I don't want to do that to Steve.
I do. So go ahead.
I do too. But this stock is going to continue to move higher. It's almost trading as if it's a biotech stock. It's almost trading in that regard. But listen, it's got significant fundamental momentum behind it, and I think it's going to continue in the interim.
Okay, so let's go back to energy. As we get that news, we watch the stock up just shy of 1.5%.
Okay, Lilly, we got FDA approving its obesity drug. So that should be good for 10, 20 points, I would think.
I just thought it was really crummy earnings. I really did. I mean, earnings missed, but free cash flow missed. They're having all kinds of delays. They're just not executing like I had expected. I mean, we all expected downstream numbers to be weak, and they were, but they were actually even worse than expected. So just a lot of problems, and I think the M&A is distracting them, quite frankly. They've made 3 big deals in the last year, and I think that over the long term, it's going to be wonderful. It's going to be great. They're eventually going to be synergistic. However, I think it's really detracting from the shareholder value creation story, buybacks, dividends, and that's what I want to see. And I don't want them to have to tap into their cash to do it. So that's why I've trimmed it. I still don't own a small piece because it is so cheap. I do think eventually they will get their act together. But for SLB, which beat, they raised, margins are going higher. The stock trades at 14 times. It's the #1 in the industry. And Diamondback Energy, I mean, that quarter was a thing of beauty in terms of across the board, in terms of beating, raising guidance, free cash flow. They're doing all the right things. So I put more money into both of those.
Okay, good stuff. Joe, you're the one I cut off to go to that Lilly news. Please continue your thoughts on where you think oil's going from here and what you think it means for energy stock. I think it's obviously it's not good. It's a reduction.
Okay, Eli Lilly, DF. Lilly with the approval. FDA approves Eli Lilly's obesity drug. Looking for a reaction.
Domestically and globally, and I believe other commodities have already signaled this in earlier months.
But you said this is the make it or break it quarter.
I did say that. In fact, I still believe that it is. I know you're looking at me because you realize that I am overweight energy, but there's nothing I can do about that.
I'm not
until the end of January. I know what this is.
I know you own 16 positions in. I'm not necessarily looking at you because you're overweight energy. I'm looking at you for somebody who has suggested this is make it or break it. If you're now worrying that it's going to break it.
Well, what's interesting is I'm pretty confident. I've been pretty confident.
I just, wow, they're so smug. It's like he has the answers to everything. All right, just sitting here watching the markets. Exactly what you'd anticipate the markets to do, given the current environment. After a big move higher, to just sit and consolidate. So that's what it looks like right now. The S&P is just consolidating after a big week. Look at the volume. Look at the volume. That's about 17 billion shares trading hands over the last 7 trading days. 16, 17 billion shares trading hands since the low, 4103. All right, consolidate up here. Do you think this is going to come all the way back? Maybe.
Let me just finish this final thought. So I think what this is positioning more than anything else. And if it is positioning more than anything else, that sets up for a potential trough at some point in the near term.
If I may make one point, good
Yes,
analysis.
yes, you
Thank
may.
you. Look, you know what we haven't talked about in several weeks? The Strategic Petroleum Reserve. It's always
Thankfully.
now. Well, no, not thankfully. I mean, we as a nation have done something stupid. I mean, we've done something unstrategic. We've drawn this thing down, and it's really, really too low. We need to refill it. Now, look, they were supposed to do it over the summer when oil was below $70 a barrel, but they didn't. I think that was because the debt ceiling negotiations were going on and prevented them. $75 a barrel, Joe. They should be buying barrels of oil hand over fist right now to refill the SPR. And I don't know why they're not, but any thinking person is going to say refill it now.
probably don't have the money to do it because it was in the 60s. They didn't buy it when they told Saudi Arabia that they would. You happy with your ExxonMobil, Jim?
Eli Lilly pulling back a bit more. Tesla pulled back. What was that? Tesla. All right, so flat VWAP, pulling back, looking for a bounce back into the range. Whenever you have a flat VWAP, just looking for a price to bounce around.
Recessionary camp, so you're looking at demand and you're saying it's going to continue to increase from here, and there's a supply-demand imbalance that's going to benefit Exxon.
They could be fraternal twins. They could be Charlotte different from the other. You thought they were identical twins, and maybe they're not.
I don't want to say something that people are going to be emailing me. You're insensitive. You're a jerk. Yes, they could be fraternal twins.
For years, Chevron outperformed Exxon for years. You have to admit that. This has actually been a reversal. This has really been a surprise and disappointment.
All right, New York FANG. Just looking at the Qs.
Just added to this consumer name. It's up 8% in a month. We have those details just ahead. And later, we'll get you set up for Disney earnings after the bell. We got some media stocks are on the move big time today.
Okay, do the Qs look anything like they did in October of last year? Oh, excuse me. October. This is the wrong chart. My bad. That's the 2018 version. That was pretty funny. That's pretty funny. Let's go to the current time frame. Okay, so we're still moving higher. Let me go out 3 years. So what I meant to say is when we hit the peak in 2022, December 2021, 22, we started turning down. This is the Qs. Does this look like, who is that? Hold on one second. I don't know who this is. I think I need to take this. All right, sorry about that. It's a good thing I took it. That was my son's teacher, gifted and talented class. I need to set up an appointment. All right. So the Qs, you can see, continue to push higher. We're not peaking yet, going into the seasonally strongest months of the year. We're in an uptrend like we were at the end of 2021, but we're not peaking and turning yet. So that's something we'll be watching for on the Qs.
Philosophically, I don't care whether it's the right thing to do or not. That's what Americans do. They consume.
Okay, so
Price target cut today to 174 from 184, and that is at UBS.
we have pulled up above that trend line. This looks a lot like the New York FANG index. Okay, volume looks really good. So
margins. Can they be profitable in a challenging top line environment? Comps are going to be down -5, -6. But can they see another quarter, would be the third quarter in a row of operating margin expansion?
okay, we continue here in the background. I continue to hear selling. All right. Let's look at the New York FANG index. That should be lower. Had a nice pop yesterday. We're in the top part of the candle, so it's not a big deal yet. Not a big deal yet. We do see some profit taking after breaking out of this descending channel. The top 10 stocks on this index, the only 10 stocks, I should say, they're all about 10% weighting. Tesla's down to 7.83%, and Microsoft's up to 10.8%. This is changing. This changes dynamically week to week. Tesla used to be about 9.6%. Now it's 7.83%. We can see the historical performance versus the NASDAQ and the S&P. S&P is in light gray. NASDAQ is in black. And the FANG index outperforming. So we are watching the New York FANG index. Currently in the upper fifth of yesterday's price action. And still hearing a little bit of profit taking.
Exactly right. It's like 70% at Walmart, 75% at Walmart. It's only about 40 to 45% at Target. And so you're seeing definitely people flocking to, on the consumable side, to Walmart, which is why Costco's also doing quite well.
10-year.
Negative about the consumer or discretionary stocks, but yet you're overweight that in the ETF. And momentum, which makes a difference for you, obviously, the XRT is down 8% in 3 months. So it had a downdraft over a period of time where you could have rebalanced out of some of these names. You did not. Why?
Well, that's not true. We sold out of 6 names. So
Retail ones?
we pulled out. We got out of Chewy. We got out of Nike. We got out of Ulta Beauty. We were sellers of those names. We were out of Yum China.
Why are you still over? I should have phrased the question better, and I apologize. Why are you still overweight?
So, excuse me. We are overweight travel. We're overweight e-commerce. We're overweight home builders. DR Horton, Lennar, and we are overweight apparel, specialty apparel in the form of Lulu, and we also have quick serve through Chipotle. So we only have 3 names that are pure retail, and as I said with my initial comments, they are at the bottom quartile of performance.
Okay. Well, this is a perfect segue to go to our retail reporter who's got our news update, Courtney Reagan.
Thank you very much. Fascinating discussion there, Scott, for certain. Well, the Israeli Defense Force reopened a humanitarian corridor for 4 hours this morning, allowing passage to southern Gaza. An IDF spokesperson called the northern Gaza a, quote, fierce combat zone, and said time is running out. The Rafah border crossing is also open again today. Documents obtained by NBC show more than 700 people are eligible to cross, including around 100 Americans. The EU Commission recommended today that Ukraine be invited to start membership talks as soon as some final conditions are met. regardless of the continuing war with Russia. Ukrainian President Vladimir Zelensky called the report, quote, a historic step. EU leaders formally accepted
MACD, stochastics. Stochastics starting to embed. Last time it embedded the end of August, beginning of September. We did grind a bit higher up into that upper trend line. Now we're above the trend line. RSI is a little bit of a hook, did make it higher than it did back in August and in October. So after last week's run for the roses, we followed through. We broke out of this trend line. We're just waiting to see how far we go back into Tuesday's price action. Okay, so the 10-year yield continues to move lower on the daily. Let's see, US 10-year. Okay, we're at the low 4.5. We are starting to bounce. We're below the 50-day, so that's a good thing. 10-year yield's below the 50-day. Okay, so we need to see this grind lower. I don't expect a big drop off, but a grind lower would make sense. RSI's dropping. MACD and stochastics turned down and to the right. So with stochastics where it is, could be a day or two. We could bounce a little bit and then turn over. Note the 9 and 21 day crossed over last week and on Friday, and then into this week continues. The 9 EMA is headed towards the 50-day. If this was a stock, we would have been out of this already at about 48.50 when it dropped below the 9 EMA and lost the 21-day at 47.75 or so. All right, so you would have been buying the way we like to look at the 9/21/50 and 200-day. You'd be buying as we start to pull back and bounce off of these moving averages. Now you're doing the opposite. You're thinking short. We look at the weekly time frame. All right, we're starting to lose the 10 EMA. Okay, so seeing the opposite in some of these long-term funds, TRBCX. Sorry, always do that. TRBCX on the weekly, back above the 10 EMA. So this is the exact opposite of the 10-year. We're starting to see price action move above on TRBCX, a T. Rowe Price Blue Chip Growth Fund. Now, if we break above 140, 45.50, this will be off to the races. This was a 50% gain from December up until 45% gain from December up to the highs of July. And now we're looking for a breakout. And I'm actually looking for, by the end of the year, hopefully, somewhere between the previous high, looking for somewhere between the previous high and where we are currently by year end, because it's so close now. We are so close to the year end. Only a few weeks to go. Can't believe Christmas is around the corner. TRBCX. Okay, here we are. Okay, so there's your high over there. Okay, so 100% would be a move back to 177.24, more or less. Okay, we already made it through 50%. Now we're looking at 618. On this move higher, we pull back to 236 and we bounce. So that's pretty strong market in TRBCX. Okay, listening to a little bit of bullish.
So, Jimmy, the stock's down another 8% today. There was a negative note from, I can't remember who it was on the street. Bank of America, thank you, yesterday. Jessica Reed Ehrlich, maybe it was, who talked about passing up on strategics. And that was one of the reasons why the stock sold off hard yesterday, I think it was. And now it's followed through today. Maybe in part on that and also WBD.
Well, today is definitely Warner Brothers. I mean, and I think because yesterday's news is yesterday news. But I think what's being missed here is that there's something going on at Warner Brothers that doesn't seem to be being replicated at Paramount. If I just go back to the earnings, and we didn't have a chance to do this last week, Scott, but the earnings at Paramount, which came out Thursday night, were fabulous. I mean, free cash flow much higher than expectations. announcing that they.
All right, what's TLT doing? TLT.
Now peak losses for.
All right, TLT looking really strong. If you're thinking about bonds and selling covered calls, that's a good way to make some money on a very safe instrument, safe asset, TLT.
In terms of the linear media, which actually is going to do well next year with Super Bowl advertising and political.
All right, here's TLT. Looks really good. Okay, I got to make a quick phone call. I'm going to mute you guys for a sec. All right. Eli Lilly's starting to see some volume coming in. Eli Lilly's starting to see some volume after the FDA approval of its obesity drug. A little dip. Now it's starting to see a move higher. Lilly.
I mean, that's a huge hire. He's been around for 34 years. What a success story at Pepsi. And I actually think that maybe he's the next CEO. Maybe Bob Iger is bringing him in for the next couple of years or however long it's going to be. But this is a seasoned veteran who knows how to run a company and how to drive sales. And now I think Disney's much more complicated than something like a Pepsi. Pepsi wasn't broken.
All right, futures starting to clear some levels here. Thank you, Grover.
Wasn't exactly in line with the creative ethos. Trying to choose my words carefully. Who wasn't necessarily in line with the creative ethos that defines what Disney is. And that's one of the reasons why Bob Chapek did not succeed and why he was arguably not the right person for that job in the first place, and now Iger's made it more of a priority to have a person in line who more fits the culture of what Disney is, not to take anything away from Hugh Johnson, because he's a wonderfully nice man and he's had a great career in his own right, but you get what I'm saying.
Look, I think that there is a good bench. Iger has put together a very solid bench, and so I think Hugh Johnston will get the financials organized. He will streamline where he needs to. They already announced a $5.5 billion cost-cutting program, and Johnston's probably going to add to that. There's no question in my mind, but it's going to take a little bit of time. Does he have the creative juices? I don't really know, but I need an operator and someone that can execute, and Chapek could not do any of that. Couldn't be. He wasn't a creator, and he wasn't an operator, and he wasn't an executor. So I think I would give the benefit of the doubt to Johnson.
Jimmy.
Okay, so what if just for today, we don't focus on ESPN and Hulu? I mean, I've talked about that ad nauseum. What if for today we actually focused on the health of the streaming business when the results come out? Let's see. Did they add subscribers? Did they control costs? Are they on a more accelerated path towards profitability in the streaming business? As I just said, Paramount is. Let's see.
All right, up next, we're tracking some trades. Bill Baruch, he just bought a big bank stock. He's going to join us straight ahead, tell us exactly what he has done. And tomorrow, do not miss CNBC's Your Money virtual event. You can hear from Jim Cramer and top financial experts on ways to maximize your finances. You can scan the QR code or visit cnbcevents.com/yourmoney. Halftime, right back.
All right. Hope everyone's having a good day. It is 12:42 on the East Coast, the coast with the most. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday. All right. Just scanning through stocks at the moment. Cassava, no follow through. Chewy. Okay. Merck, no follow through. Pull back. Lilly, looking for the break higher. Looking for Lilly to see some short covering. Take off to the upside. Eli Lilly. All right. So pretty much what we're anticipating for today, light buying and selling, hanging out near recent levels. We got the 10-year yield dropping below the 50-day. We got S&P consolidating for the past 3 days after pushing above 43.50 on Friday. We started off the week above and looking for price to stay above this area. Okay, we got a little buying coming in now. S&P. More chop. All right. VWAP is got a pretty decent downtrend in at the moment. 43.50 is a support level. We didn't get down that far. We're starting to put in a higher low, looking for a higher high now.
Bill Baruch's been a pretty active trader, part of our investment committee, of course. He joins us right now again because he's bought JP Morgan. So you initiated a small position in JPM yesterday, I'm told, correct?
That's right. And, at the end of the day, JP Morgan is the undisputed heavyweight champion in banking. We've
Bank of America, I've been hesitant to build into that position, sitting in the cellar, bottom 5 of our 30 stocks. But I like what we've seen in rates. I like some of the environment coming ahead. I mean, year 2 of a bull market, which we're heading into, is I think financials and healthcare can outperform. So I want to get more banking in there. JP Morgan, I mean, they've guided strong on net interest income, and I just think that they're going to be the leader. So Bank of America may have some catch up to play here, but in case it doesn't, I think JP Morgan needs to be in the portfolio. So adding the two together, they're in the middle of the pack, even though they both sit at the bottom.
Yeah, I'm looking at financials. I mean, overall,
All right, I'm looking for a move back to VWAP, the Qs.
where projections are and where the economy might be going seems to just continue to hamper this group. A good week here, a good week there. The more medium-term picture looks dicey, though, no?
Absolutely. And my fear here is you look at Bank of America and you overlay that with the 10-year Treasury. I mean, they're trading leg and leg. So you think if you're buying financials here, you have to think that we really have.
What is Rivian doing? Did it ever bounce? Rivian? RIVN, Rivian? Nope, nothing yet.
Year, a lot of this is going to subside. Again, at 131 billion in unrealized losses in Bank of America isn't eyesore. So that's why I want a little more financial exposure and add a JP Morgan.
All right, good stuff. Well, we appreciate you coming on and telling us about that. We'll see you back on the desk soon. Bill Baruch, Stephanie Link, Bank of America, Morgan Stanley.
Lilly still trying to push. The highs this morning was right around 613, or about $6 off of that low right now. And Lilly is pushing a lot of volume coming in. Lilly, a lot of volume on Lilly.
And I know they're the best in breed. I do think that America's going to play catch up, especially if you do think, like Phil does, that rates have peaked.
Wait, you just said JP Morgan's the best in breed?
It is the best in breed.
Why don't you want it?
It's too expensive. When I can get Bank of America at 0.8 times, when I can get Morgan Stanley at 13 times. By the way, Morgan Stanley is now yielding 4.5%. That's pretty competitive to the bond market at this point in time, but it hasn't done well.
I mean, the PE, though, let's show the PEs again on JPM.
Microsoft, nice bounce. It's on a buy signal on the daily, but looking for better entries. Microsoft, it's on a buy signal on the 5-minute. Since went on a buy signal right around 1210. Microsoft went on a buy signal at 1210. Right here, looking for a follow through. All right, so it's got to get above. It's been flickering. Got to get above this red line right here. Microsoft flat VWAP, so I'm not expecting a lot of traction at the moment. Eli Lilly, still looking pretty good here. Eli Lilly. All right, lots of volume. Eli Lilly. What's McDonald's doing? McDonald's, those sugary junk food type of trades. McDonald's being one. McDonald's, let's see what McDonald's looks like. McDonald's. Yeah, that's pulling back. McDonald's with that obesity drug, Lilly's obesity drug being approved by the FDA. It's weight loss drug. Okay. Tirzepatide. Zepbound for chronic weight management. That came out, that news right around 12:20. All right. We had initial pop, a little drop, a higher low print. Now we're producing a higher high on Lilly. Okay, what's Merck doing? Merck, not much. Johnson & Johnson. Not much going on there. Let's go take a look at what is making inroads at the moment. We've got EXR climbing to the top of the list, the S&P. Take two, our buyers stepping up. All right, so what I always look for is, are there wicks on the top of the candles? Do we have a nice follow through? I like the way the airlines look, given crude oil moving lower. Okay, crude oil moving off very quickly to the downside for the holidays. We've got the opposite in the airlines. Airlines sold off when crude oil was headed towards 96 to 100, continued to sell off. Now we're above the 921 day. We got to get above the 50 day. Still not out of the woods, but for a mean reversion trade, back to the 50 day makes sense. Look at some of these look better than others. What Royal Caribbean, different reasons, but Royal Caribbean, there's some impact with fuel. Bookings, but these travel related names started to pick up some share, like Booking and Expedia. These all Trip, TRIP. Yesterday, Trip, we made a mention of Trip. It was above the 200 day. Now it's consolidating. Trip actually might get something going here. Trip.
So we're continuing to sort of hold in there. Okay, but unstable underfoot. You guys are talking about the media stocks just getting taken apart. But also, if you look at things like the reaction to Robinhood and Datadog and that whole class of 2021, those companies that are still out there, or the EV space or solar, it just shows you that things that are not kind of already presumed to be reliable and macro kind of insulated are, getting hit. So I think that I understand why people have low conviction. High beta stuff is not really ripping off the low. It's kind of just doing okay. So, it has plenty to prove, but I think
Thank you, Grover. Yeah, 2-1 down.
Still doesn't change much. That's about when we finish September. So just to sort of scale what remains a routine pullback or something more.
At what point does falling oil become a problem? Where, gas prices are down, that's obviously good. But where the narrative goes, falling oil for energy is down again as a sector 1%
Sure.
today.
Yeah, I mean, I'd love to hear people who thought that, oil at 100 meant that the economy was ripping, and now we're saying oil at 70 means that we're going into a real tailspin. I do think it does create that perception, and it creates that overlay of, look, we thought we bought ourselves some time.
Yep.
In this cycle, we don't have to worry about that yet, and it could bring it more to the fore. Cyclical stocks are not doing great, but they're hanging in there as well. I think I would say weekly claims start to matter in this environment. If you saw unemployment rate go up to a level where you sort of have to ask if you should be worried about it yet. So it's not to me about oil meaning something in itself. If it joins a narrative that says the economy is sliding faster than we expected, then it becomes.
All right, I'll see you in a couple. Mike said, we'll see him again, of course, on closing bell. Final trades are next.
All right, so the 10-year yield U.S. Let's see what the 20-year looks like. 20-year yield U.S. 20 years at the lows of the session. Let's look at the daily. Here's the daily moving lower. Okay. So that looks good. TLT. And the 20-year. Here's a 20-year. Okay, so you can draw a trend line through here, I guess. If you like, you can draw a trend line through here, more or less. The 50-day right in this area. Looks good. All right, so looking for a bounce. What's Tesla doing? Tesla. Yeah, it's a good lesson learned, Stephen. Take profits. If you got nice profits in the morning, take your profits first 15, 20 minutes, wait for the markets to settle down, give you clear direction. If we have a bullish market, you'll know it pretty quick after 10 o'clock usually. Today, we still don't have a whole lot of blocks trading. To start the day, we had 8 on the Qs, 6 on the IWM, and 5 on SPY. And that was very early. That was like the first couple of hours of the trading day. We had very few blocks. That told you the institutions weren't doing much. And if you add that together with some of the things that Grover's been posting and talking about, tick cumulative is mostly bearish. We got 2-to-1 down volume on the NYSE, 1.8 down on the NASDAQ. So we've had a nice run up. Now we're just giving some of it back. Airlines, American Airlines got about a B so far, AB. Looking for C and D, ABCD pattern. We got A earlier this morning around 10:35. B pivot right around 12:30. Looking for a higher low.
All right, 3 o'clock Eastern closing bell. Ahead of Veterans Day, we have former New York Giants Super Bowl winner Phil McConkey. He founded Academy Securities. That's the first veteran-owned and operated investment bank. We cannot wait for that. Goldman's Jan Hatsias is with us as well. Just put out his 2024 outlook. We will go through it. Final trade. Stephanie, let's go first.
Fortinet, very disappointing quarter. Guide was lower second quarter in a row. I think they kitchen sinked it. I still like the total addressable market and the margin story long term.
Weiss was listening in his car. He says it wasn't Lilly, even though we both know it was. You're wrong, Weiss. We're right. What's your final trade?
Apollo Global Management.
Thank you.
Wynn Resorts.
All right, great stuff. I'll see you on closing bell. The exchange is now.
We're in Chewy together, eh? Cool.
Thank you very much, Scott.
Yeah, Chewy, that's been Sunrise Trader.
2 ways to play the trend of people being stuck in homes they bought with low mortgage rates. We'll talk to 2 CEOs with a front row seat on that trend. One beat, the other missed. We'll look at why and what that tells us about housing globally. Also, Disney, Affirm, and Instacart are on deck with their earnings reports. We'll preview those and highlight the one name out of the bunch that our trader really regrets selling. But first, let's get to today's markets. The latest numbers. Dom Chu, it's been a weaker picture.
What do I have on Chewy? I have the December or January? I have December.
The Dow Industrial down about 1/3 of 1%, 34,050, down about 100 points. The S&P 500 currently sits at 4368. That's down about 9 to 10 points, 1/4 of 1%. And to give you an idea of the trading range so far today, you got to gauge where we are right now. We were up roughly 13 points at the highs and down 19 points at the lows. So we were positive modestly at one point. We've drifted lower. The NASDAQ composite, again, off 1/4 of 1%, 38 points to the downside for the composite index. The last trade there.
66% of American households have at least one pet. Cool.
Right now, U.S. benchmark West Texas Intermediate crude, $75.13. That's down about 3%. Just over the course of the last 2 trading sessions is where we dipped below that kind of longer-term trend line, the so-called 200-day moving average, the 200-day average price on a rolling basis. You can see here, the last time, by the way, we drifted below that level was back in around the mid-level of July. So this is the lowest level that we've seen since July for U.S. benchmark crude prices. We'll see whether or not there is any kind of a floor for this going forward, but it's been a pretty decent downtrend over the course of the last couple of months. And then one stock to keep a close eye on, we talked about the closing high that we saw record-wise for Microsoft shares. Right now, they're still up about 1/2 of 1%. We're still a stone's throw away from the intraday record that we saw going back to July, but still, on a positive day here overall for Microsoft, you can see that level is the one we're kind of watching right here, about $368 or so. So watch those particular shares. We are pushing higher towards those intraday records, but again, closing record yesterday for one of the most important, Kelly, stocks in the marketplace. I'll send things back over to you.
Indeed it is. Dom, thank you for now. We appreciate it, Dom, too. Well, stocks have generally been rallying since the Fed meeting last week on hopes they're done hiking rates, especially as inflation levels have come down sharply. But the Wall Street Journal says the Fed shouldn't get credit for that drop because the best we can say about the Fed is that it stopped things from getting even worse. So what should we make of the Fed's policy moves? And is the market correct in expecting that rate cuts come next? Let's ask David Servos, Chief Market Strategist at Jefferies, and CNBC Senior Economics reporter Steve Leisman. So glad you could both join. Steve, let me just start with this, with the article, kind of set us up a little bit in terms of the debate that's out there on the street. I don't think there's any doubt really that the Fed's hikes certainly helped break the back of high inflation. It's just I think consumers want to see even more relief on the price level than what we've seen.
Yeah, you hit that term exactly right. Consumers want the price level, and the policymakers going for the level of increase or the rate of increase of prices. So there's a bit of a difference in terms of the goals there. Look, I get where the journal is coming from on this article, and a lot of it makes sense in the sense that we have had stronger growth and inflation has come down despite that stronger growth. And in some areas,
All right, so a nice turn there, Tesla. Come on, Tesla, just get some traction here and just get. All right, all the FANG stocks are seeing shortcut.
Areas into the supply that should be out there. We know we've been underbuilding homes for a long time. We know there's a huge demand for it. And on top of that, the demand for housing, the unique demand for housing that came out of the pandemic, which is for those homes where you could have an office in there. The other thing is cars were down, and there was a big problem in terms of getting the automobiles and in terms of supply. So while the Fed was trying to tamp down on these areas, and the 2 areas that actually have the easiest impact on, there was incredible demand for both of these products on the other side. So to the extent that it has had an effect, it's done so with a tide running against it.
And Dave, a lot of people have been looking for relief on that front, for an end to rate hikes and maybe some moderation in mortgage rates and so forth. But you're warning people not to get carried away, as they have over the quarters, with this idea that cuts are coming. Why not?
Well, honestly, Kelly, it's the same story we've been telling since the beginning of the year. People at the beginning of the year were forecasting rate cuts in September.
High tech alert.
And clearly, we're here in November still debating.
Yes, you are, Stephen.
So I don't think the argument's changed much. It's It's been an argument that we framed as the Fed really
No, it's not just you, Scott.
restrictive as maybe the rates market would suggest because of the size of the balance sheet and a few other
Yep.
factors related to the strength of the consumer. But to go kind of go back to Steve's analysis.
There goes Google. Google blasting higher.
I think it's a really interesting article and a really interesting time to debate what's in there, because I do believe the article has some good points in that it probably wasn't
Yeah.
the Fed that brought inflation down. We've had very strong growth and one of the fastest disinflations in post-World War II history. I think the third fastest, only to be surpassed by the deflations or disinflations of 75 and 82.
All right, there goes Google. I know I'm watching some of these people.
But I think it's rooted in the whole idea and the misconception that the inflation itself was the Fed's fault. So I think you have to take that article back, and if you're not going to lay blame for or credit for the Fed on getting the inflation down because of supply side stories and supply side logistical issues that were related to the reopening, I think you also put the same supply shock in play for the inflation that we got between.
All right, all the FANG stocks are saying FANG, shorts covering.
The article is not doing, and most of the critics were not doing. And I know you want to get back into a couple other things, Kelly, but I want to go back and put criticism where I think criticism really is due. And that's with all the folks in the summer of 2022.
All right, looks good.
Criticizing the Fed for being too late and generating all of that inflation when it really was a supply shock story. The Fed staying on top of it and keeping inflation expectations anchored, as Olivier Blanchard said in the article that he quoted. But most importantly, the big mess was all of these
All right, American Airlines, ABCD, AAL, ABC.
That's clearly been the biggest miss of this entire thing. And that's where the criticism should be, is that we didn't have to crush demand to get inflation down because this was a supply shock to begin with.
Let me come back to that in a second. But meanwhile, we'll see markets moving because we just had this 10-year note auction. I want to bring in Rick Santelli to hit those results. Rick, walk us through this. What just happened? What's the grade you'd give this today?
Well, the grade was Charlie minus, C minus, a bit below average. Let's go through it, shall we? 40 billion 10-year notes. That's versus 35 billion on our last package. And the yield, 4.519. The yield was a bit higher than the when issued market. Higher yield, you go lower price. If you are selling, you want a higher price. Right there, you get marked down a bit. What was really notable is the direct bidders were extremely light at 15.2%. That equals a February 23rd date right on the nose. But to find a lower number, you have to go back to February of 22. So that really makes that category of direct bidders, which is so important, weak. And 15.1% go to primary dealers. That's the most they had to take since April. Now, why isn't the market more responsive here? I'm a little surprised it stopped exactly at 4.5%. But maybe technicians aren't as surprised. Let's go to the charts very quickly. Here's a 10-year note yield chart. These are arcs. So, you need a compass to find out where you're going. Sometimes you need a compass to find out where the market's going. A protractor will work as well. These are roughly 89-day cycles. What's 89 days? Well, add up 55 and 34. Those are two Fibonacci numbers. So 89 is a Fibonacci number. Now, granted,
Fibonacci. I love Rick Santelli. This guy is so on the ball. Some people don't like him because he's, got that same thing that New Yorkers have that kind of like the way they talk, just very confident, almost seems a little cocky in some respects. He's good though.
Formation. The neckline comes right in at 4.5%. So this is a huge area. The weekly close above or below it will dictate whether we go back down here or we retest 5%.
You do? That's cool.
So, Rick, this is a little bit of a head scratcher because we see yields dropping, and yet there wasn't as strong demand as expected. Those two things don't usually go hand in hand.
Well, what we're seeing yields dropping is that the auction, if you take a step back, yes, it wasn't a great auction, but
okay, a little bit of selling here.
Traders are looking at all
all the big stories that are out there that I'm sure you've seen, that we are seeing a huge amount of buying, especially in the futures markets at these levels. And I think that the mogul of the auction is sort of small. The amount of longs that want to come in the market that think the highs are in is a very large number. So be careful. I'm not saying yields can't go down. What I'm saying is you may have a lot of company. This 4.5% is quite important.
And let me quickly get a comment. Thank you, Rick, from Steve and David before we go. And Steve, I guess my thought for you would be we could almost go below 4.5% on the 10-year today as we clear this hurdle. How would the Fed take that, do you think?
I just want to. I'll get to that in a second. I disagree with Rick on the grade on this auction, and I always defer to him on this. But I got to say, this was the story of the day. I couldn't wait till Rick came on to tell us how the government did it, selling $40 billion of tens. And there's a big question as to whether or not the market has an appetite for it. Yields came down, and the market took down the auction at that lower yield. So when I see this number here at 451, I think it's
auction. Everybody gets the same yield.
Wait, Rick's mic is still on. Steve, finish your thought, and then I'll give him a chance to respond.
No, my point is that if they're selling it at that yield and people are buying it, I get the issue of the directs not having to take too much of it. But my point is that it was a big risk, and the risk seems to, at least for the moment, we seem to have passed it by. That's why I give it a some better grade, and I'm a little bit relieved that this was not a bigger issue, that the market didn't balk at these lower yield levels.
All right, Dell. Sideways price action, but it is bouncing, so that looks good.
Off the low seems to be taking this better than maybe the bottom.
Sam Bankman-Fried, man, that dude, he's so screwed. A young guy. I always wonder about that. You think about it. Never want to be in that person's shoes. That young, you screw up big time. You're screwing up. You get caught, and you go away for the rest of your life. Oh man. Maybe they'll have him work from behind prison walls. I guess he's going to go to a federal prison, right? Because of the degree of the fraud. But maybe he works from behind. Maybe he worked from behind prison walls to help the government set up Bitcoin regulations, etc. I think he's probably going to get some sort of benefit. I mean, you can, but keeping a, I don't know. I don't know him personally, but keeping a brilliant mind or a smart person down. I mean, you know what I mean? What the hell am I talking about? Just looking for some positive to come out of the negative with SBF's incarceration. That sucks, man. He seemed like a bright guy. Sure he is. Too bad. Too bad he didn't understand risk management 101. I mean, we only talk about it like every day of the week. Manage your risk.
And realize that they're very willing to use the balance sheet to deal with financial instability. It's been very successful this year. It was successful for the ECB and successful for the Bank of England over the course of 2022 with the Italian government bond market and the gilt market. And I think they would be more than happy to let the balance sheet do some work for them if there's a problem in a very specific sector. I don't think they're going to abandon QT anytime soon. In fact, I think that's a very unlikely thing. So the balance sheet is there for emergencies. The balance sheet is there for hiccups that we aren't really necessarily taking into account. And I think it acts as a bit of a new Fed put, something we've been writing about to our clients recently. Slightly different Fed put than the one with rates, and probably takes the rate put that we're used to, which is why people buy 10-year notes and why people buy securities to lock in those longer rates, because they think rates might go down a lot in the future because it's messy. It takes a little bit away from that. So I'm I'm not in the camp that there's a big duration trade to do here. I think the market's in a little better balance than it was at 5%, but I'm not chasing duration at this point.
All right, and Steve, I'll just give you a quick last word.
I agree completely with what David's saying. I think that the next move of the Fed is going to be cuts. There's a big question about when that happens. The market seems to be using May, June, and July as their expression of hawkishness and dovishness. May, they get more dovish. That's when the cut gets priced in. July, they get a little more hawkish, thinking that's the first cut. There will be cuts next year. I think that's fair to say. But the cuts, I believe, will happen in a context of the Fed pivoting around more or less the same real rate. So I don't think the Fed will need to loosen very much. I think the Fed will need to stay consistent, and if inflation does indeed drop, the Fed funds rate will drop along with that to maintain a consistent differential between inflation and the Fed funds rate. So don't get too excited about it when the Fed does eventually cut rates.
All right, and I just want to mention the market reaction where we're kind of back to the look that we had before the 10-year auction, as I think people are trying to figure this one out. It's a bit of a head scratcher. Thank you both for now. We appreciate it. Steve Leisman and David Zervos talking to us as we go through the economy. Coming up, we have two C-suite views on the housing market. First, how the home repair and maintenance space is holding up with the CEO of Front Door, and then we'll talk actual doors with the CEO of Masonite. But first, let's take a step back, check in on the gig economy. What is that telling us about the labor market right now? We'll talk to the CEO of Upwork, a pulse check on their results fresh off of that report. And as we head to break, let's get a quick look at markets as well. As I mentioned, the Dow heading back towards session lows after initially rallying somewhat on that 10-year auction. We're down 111 points, 1/3%, and the Dow is the worst of the major averages. S&P's only down 7, NASDAQ down 22. Watch that 10-year note. Now back up to around 452. Just a hair under that. We're back after this.
This is The Exchange on CNBC.
All right, so yeah, we got some nice little moves here. Our markets are starting to bounce a bit. Tesla back to VWAP. The last time we hit VWAP, we got above and pulled back at standard deviation 1 V bands. Standard deviation 1 VWAP bands right there. We hit that and got rejected. Tesla, so we're watching that. Google, some people I'm watching shorted Google. All right, so I'm watching Google. And Apple, they shorted Apple too. I don't know. I'm just looking at maybe just sideways price action for now. Excuse me. VWAP down and to the right. Slight downward slope to VWAP on the Qs. So that's telling me stay cautious. What's IWM doing? IWM. Small caps. We need small caps to get back towards 180. Look at PayPal running. PayPal, what's going on with PayPal? PayPal's on the move here. PayPal. What's up with PayPal? Okay. No news. PayPal, no news. PayPal.
Welcome back to the exchange. Shares a
Thank you, Kelly Evans.
Thanks, Kelly. Great to be here. We talked last quarter about how a lot of people were looking for more freelance help with AI, for instance. Is that still a key factor here? It's a huge theme right now, Kelly. I think businesses of all sizes are really trying to figure out how they can adopt these new technologies into their workflows, into their business products and offerings. And we're seeing tremendous growth in this area. You know, it's off of a small base, but certainly it's the fastest growing category of work we've seen across
PayPal, big move on PayPal here. I don't know what's going on. I don't see any news, no news that I can tell for now. PayPal, PYPL. PayPal on the move.
We're seeing strength across all the categories we serve. You know, our marketplace is incredibly diverse with 120 plus categories of work and serving small through large businesses. This past quarter, we saw our net new logos expand on the enterprise side 21% quarter over quarter. So our sales team
Buybacks. Okay, PayPal.
which continues to be challenging, you know, broadly for businesses, I think, at this time. And then we're seeing, again, a lot of product innovation. So we launched partnerships with OpenAI in Q2.
There goes PayPal. Man, look at this sucker go, man. PayPal. Shoo. Nice. Let me take a look at the daily PayPal. PayPal. Okay. So I'd like to see it at 58. That would be nice. Nice bounce on PayPal.
Hitting an all-time high of 3 points from 2021 to 39% in terms of the share of professionals doing this. 60 million Americans. I mean, these numbers are much larger than I would expect. I also would have thought they'd kind of be going back towards something more quote-unquote normal. The world has changed, Kelly. You know, I think through the pandemic, through the last decades of, you know, recession, things like that, people have seen that the full-time stable job isn't what it used to be. And when we talk to professionals, they're increasingly realizing working in freelance gives them not just the flexibility around where to work, but also the independence of knowing that they can always that regardless of the economic conditions, because they have a portfolio of clients they're working with.
Q's look good. All right, that's nice. PayPal looking pretty nice. It's going off the screen now. Look at the volume. Nice. Okay, PayPal. Let me just check. Let's check the ATR PayPal. PayPal. PYPL. PayPal. 123% of its daily range. 58% of its ATR. All right, nice move on PayPal. All right, 58% of its ATR presently on PayPal.
Skilled workers who often aren't in their region, aren't in their backyard. And that is why they increasingly are turning to freelance workers such as those in our platforms to do that work. So I think that is something that has been an emerging theme, not just in the last 2 years, but over the last 2 decades that we have been in this business. We have seen that through ups and downs in the economy, there has been this enduring trend with the rise of freelance happening despite, you know, what the economy is doing.
continuing post-pandemic, which is remarkable. Hayden, thanks for joining us. Good to see you. We appreciate it.
Thanks so much, Kelly.
Hayden Brown, CEO of Upwork. Coming up, Amazon is on the way to becoming a bigger player.
All right, nice little pop on PayPal. Look for a follow through. I have January 55 calls. All right, there goes NVIDIA. Goodbye. Say goodbye to NVIDIA. NVIDIA. Okay, looking pretty good here. All right, NVIDIA on the move. All right, looks good. Okay, there goes NVIDIA. Nice looking move on NVIDIA so far.
Which you would know under the brand name Mounjaro for diabetes, but the FDA has now approved it officially for weight loss. That's sending shares up about 1.5%, a little off session highs. It will be marketed by Eli Lilly under the name Zepbound. Speaking of new names, check out also higher after an earnings beat on the top and bottom line. Remember, this is the snacks business showing resilience despite concerns that weight loss drugs like Zepbound will curb demand. All right. Apple back to VWAP.
The Biden administration looking to create more stability in the region and lower the risk of a military standoff between the two countries.
All right, Chewy looking pretty good coming back to VWAP. I know Sunrise Traders in it, among other people. Happy to see Sunrise tagging along with us. He was in it, I believe, about the same time we got into it. I did sell some bull put credit spreads. All right, so I'm playing it on a bullish, with a bullish note. I'm just collecting premium, letting prices move away, up and away. At some point, Chewy, I'll probably take that profit, maybe buy some shares, sell covered calls or whatever. Chewy looks really strong into the holidays. I got a feeling with 66% of households having at least one pet in the US, 66%, I would imagine there will be some spending. I know I will. I already sense that I will buy our cats some presents. You know, it's it's interesting how quickly, even if you're not a cat person or a dog person or a parakeet person or an iguana, whatever the pet happens to be, you have them for a while and they become part of the family. You take care of them. They, love on you and everything. And it's hard to imagine not getting them a present for Christmas. You know that they're going to sense something's going on. And if they get presents too, how great it'll be. Chewy plays right into that. PetSmart and other, retailers. Retails. Speaking of retail, let's look at TJ Maxx. I wanted to take another shot at TJ Maxx. We had a nice quick trade on Thursday last week into Friday. We took profits. Now it's just consolidating. I don't think this is going to last much longer, but TJ does have earnings. TJ has earnings on the 15th, I believe. 15th is next Wednesday before the open. So I probably won't do anything on TJ Maxx between now and then. I do like the company. I do like the prospects of discount retailers like this that bring value. People who will be shopping. That's my opinion. Take it for what it's worth. Price action, I need to see it agree with my thesis. Looking for a follow through. All right, so what's Target look like? Target, heard Target being discussed. I also wanted to do a bull put credit spread on Disney. Disney was potential. Let me see what Disney looks like. Disney. All right, sideways. All right, so I want to see Disney clear. If Disney can clear 86.30, 86.50, I'll probably put on a bull put credit spread. Let's say we were breaking out above 86 right now. I'd probably sell the 86 and buy the 85 for a credit. Usually the credit, I like a credit anywhere from 80 cents to $1.50, $2 per contract. And all you're looking for is price to continue to move higher. Now you could buy debit spreads as well, looking for prices to move higher, just bring your costs down. I do quite a few credit spreads, especially when the market starts to trend. I just don't talk a lot about it, but recently people have been asking me, why don't you talk more about it? Because I wasn't aware. So, that's I do that in my retirement accounts and stuff because I'm not day trading. I'm just, I'll put a trade on, let it swing, collect the credit, and over time, uh, call and put option writers tend to make the money. If you've ever noticed that if you trade options, a lot of times the trades don't work, and theta kills you if you don't have enough time, or maybe you bought at the wrong time and you bought in the first 15, 20 minutes when everybody else like us is selling, like with Rivian this morning, you know. So it's just another way to collect premium. I've been doing it for years and years and years. I have an iron condor on IWM. I'm expecting price to just stay in this range. Is that? No, that's not it. Let me post this here. IWM. Okay, here's IWM. All right. So IWM, I mean, this is just something I would normally do anyway, but since people are interested, I'll just show you what I'm doing. What's going on with that? All right, there's IWM. If you squint, might be hard to read, but I sold the 160 put, I bought the 155, and I sold the 195 call and bought the 200. Now that was last week. So I'm just looking for price to stay between here and there, between the red lines. Beyond the red lines, I start to lose a little bit of profit, but still making profit because one side or another is going to do well. In this case, I'm looking for both sides to do well. So I get a premium on both sides. Okay. A credit. All right. So I would advise just Check out some of the YouTube videos out there. Invest with Henry is a good one. He used to work for Goldman Sachs. Invest with Henry. He uses the Robinhood brokerage to show his his options trades. It's a very good way to look at options. I think the way that they laid out Robinhood is really, really intuitive and very easy to see options trades. So check out Invest with Henry. Invest with Henry. I believe he's from Philadelphia, or I know he's from Pennsylvania. And he's grown his account from a few $1,000s over 9 years. He's over $1 million now. So if that interests you, check him out on YouTube. Invest with Henry. All right. So
Yeah, we've got two approaches. One is our largest brand is American Home Shield, which is in the home warranty space, which is a 12-month contract. It covers maintenance for, 23 home systems that you have.
it requires a little bit of change in your mindset to sell options versus buying options. But if you haven't had success buying options, I would suggest do a little bit of research into selling options. You may find a niche doing that. I like doing it in my I like doing it. I like doing it in my 401k IRAs because I'm not doing day trades. I'm doing at least a week, 2 weeks out on these trades. In the case of IWM, that's a end of December trade. Looking for prices to stay between. And let's say something happens on IWM. Let's say it starts to move in against me. I would take the profits in the upper. So let's say IWM starts to move lower. I would readjust the lower strikes, the puts, and maybe push these down a little bit, and take some profits off the credit spread I have on the top side because we'd be moving away. Or I could just adjust the whole thing down. I can adjust the whole bracket, all four options down a notch. The thing about IWM though is it's in this range, and if you look at the range, it's pretty clearly defined. So this is perfect for a condor, okay? In that you want prices to stay between. Here's the weekly right here. Okay, so you can see it's in a range. Now we're in the lower part of the range. I was going to put it on if we got close to 180, but last week we got close to 175, almost 180. I said, well, let me go ahead and do it now. So I'm looking for this bounce to continue into the seasonally strongest months of the year. And as long as we stay between 195 or 200 and 155, I'll make money. And I don't have to worry about it because I'm not looking at theta. Well, theta is going to kick in eventually for those people who bought these options. Yields backing off. Yeah. The 10-year yield.
So houses are getting older, which means repair and remodel, we think, is also going to be very strong. So we're bullish on the long-term macros. We knew coming into 2023.
And there's nothing that says you can't do like a bull put credit spread and also take a long options trade. Just helps goose your profit, P&L.
Sure. And are you going to continue to move up market? I see this acquisition of Fleetwood. They say a leading manufacturer of high-end glass doors for luxury homes. Absolutely all the showpiece homes we see these days, it's all glass. Is that one way that you're looking to kind of insulate yourselves? No pun intended.
It certainly is a close adjacency to our doors. It falls perfectly within our doors that do doors strategy, Kelly. So Fleetwood makes an absolutely.
All right, let's go take a look at the 10-year yield. All right, so PayPal is still going here. PayPal, little flag, looking for a follow through. Look at the volume. Supposedly, PayPal, they're talking buybacks. A lot of these stocks, buybacks.
inflationary pressures in your core business as that trend shifts from pandemic rush to post-pandemic, quietness?
Yeah, it's interesting. We're not seeing as much deflation as we thought.
So those processors range from $10,000 to $40,000. The last time I checked on was the H900, H100, whatever the hell it is, NVIDIA, the processors. Some of you are tech savvy individuals. A $10,000 processor, and Elon, I don't know if he bought those. I would think he bought the more expensive ones, the $40,000 models. Speaking of chips, let's see what ASML is doing. ASML, as you know, have these big, what is it, $30 million machines that makes semiconductors for the big fabs like NVIDIA, Taiwan Semi, Intel, Micron. They're the only ones that can afford these freaking machines. They're so expensive. They're like $30 million, I think, or is it more? Let me see. ASML. Machine cost. $400 million. Okay, $400 million for a machine that makes the next generation chips. Wow, $400 million machine. That's pretty incredible. All right, so here's ASML. All right, ASML, they make this machine that's just incredible. $400 million for one of these machines. ASML. Let me show you what it looks like. All right, I talked about this a few weeks ago. Okay, look at this machine. Look at the size of this. Just imagine the engineering that goes into this damn thing. Just crazy. All right, so these are older ones. These are $150 million. The new generation machines are $400 million. Look at the size of this damn thing. Wow, it just blows my mind. And it's, the lithography and the laser that does all the lithography is just incredibly precise. $400 million. That's crazy. So anyway, ASML, there goes PayPal. PayPal's still going. ASML had dipped recently, right? And I'll be looking. All right, so PayPal dipped recently. Not PayPal. Sorry, I got 4 charts in front of my mind, in front of my face. ASML, I had dipped down to the 580s. Now it's moving higher. Taiwan Semi, TSM. I haven't looked at them in a while. All right, that's starting to move above the 200-day. TSM might be something to look at in the next few days. TSM.
Welcome back. Amazon Prime is looking to be members' one-stop shop, not just for shopping, but also streaming and even for screenings. They're offering discounted subscriptions to the primary care provider One Medical as they ramp up their moves in healthcare. Let's bring in Deirdre Bosa with all the details in today's Tech Check. Deirdre?
I like that, Kelly. Streaming and screening. So this is a bet from Amazon, not just on healthcare, but on brick and mortar as well. Now, Amazon acquired One Medical last year for $3.9 billion, and now it's offering
it to its Prime members at a discount, $99 a year. That's a discount of $100. Now, it is the network, One Medical, if you're not familiar with it, a network of boutique primary care practices here in the United States, mostly around major cities. Users can either
PayPal's still going.
primary care doctors through the app or through in-person appointments at brick and mortar locations. I spoke exclusively with Amazon's VP of Prime, Jamil Ghani, and I asked him how
PayPal's still going. Buybacks are kicking in.
There are, many Americans struggling with how to get access to healthcare on a reliable basis. Just some facts. 40% of Americans don't have a primary care physician. On average, you wait 26 days to see your primary care physician. With One Medical, you can have same day or next day.
It's a pretty exciting time to live, right? Pretty exciting times that we live in. It's also sucks in a lot of ways for your kids that have to deal with the social fabric that we are facing. It's like, you say the wrong thing to the wrong person, they want to cancel you. They want to ruin your life because you don't agree to them. It just makes no sense whatsoever. Whatever happened to, Greek logic, you have good points, you have a good premise, you prove your logic. They don't want to hear your logic. It sucks. It sucks, especially when you're older and you're brought up to respect everyone's opinion. What is he talking about? I'm sorry, I'm getting off the subject here. Trading is what we're supposed to be focused on, Vinny. Okay, back to trading. PayPal, just going bank gangbusters here. Okay, supposedly buybacks kicking in.
Thank you very much. We'll keep our eyes on their further ambitions. Here's your both sides reporting. We have a news alert. I'm David Einhorn's Greenlight Capital. Let's get over to Leslie Picker. Leslie?
Yeah, I was able to obtain Greenlight's latest investment.
Okay, let's take a look.
We have limited exposure to the U.S. consumer, and that's a position based on the geopolitical risk that he thinks investors have been conditioned to ignore.
PayPal weekly. PayPal needs to get above the 10 EMA. 10 EMA continues to drift lower, so got a lot of work to do here at PayPal. Okay, so it's still in a descending pattern. PayPal looking good though. I saw a commentary on Bloomberg this morning about these fintechs like there's two of them, two fintechs in Brazil that had worked their way up to $50 billion in market cap. And because of the changes with companies like PayPal, like MasterCard, Visa, American Express, getting into the whole business that, the fintech business, that StoneCo, that was one of them, StoneCo in Brazil, their market cap has shrunk from 50 billion down to 5 billion. And that competitive advantage is now shifting back to the payment processors like Block, Square. Look at Square. Look at Block. Did I say that? Oh, somebody else. Okay. Captain. Okay. It's like I said Trump. Now I said Trump. You kind of like you goaded me into saying it. You tricked me into saying his name. It's like Voldemort, a name which shouldn't be said or whatever the hell it is. Harry Potter. All right, look at Square. Look at Square. All right, American Express. Let's see what that looks like. AXP. MasterCard. All of these look good. MasterCard. Are you thinking about swings? MasterCard, Visa. What is Capital One Finance? Okay, COF. Discover. I always get this wrong. Discover. I always get this one wrong. I can never get this symbol in my head. I can think, hundreds of other symbols I can remember off the top. DFS. I don't know why I can't remember DFS, not so much. Capital One. Let's look at payment processors, credit cards, payment processors. Where are you? Financial. Credit card processors. Okay. Barclays. Bill. Nope, that gap down. Those are the ones like these, like Bill and Upstart. These are taking a hit from the big companies that have been around doing this for a while. Synchrony Financial, SYF.
Welcome back. Some big bellwethers reporting after the bell for the media, the consumer, and the IPO market. We're going to look at Disney, Affirm, and Instacart in today's earnings exchange. Here with our trades is Lee Munson, Portfolio Wealth Advisors founder.
What's XLF look like? XLF.
The Dow component, Disney, Moffett-Nathanson calling it deja vu this quarter as investors focus yet again on streaming versus linear, the fate of assets like ESPN, the impact of the actors strike, and potentially more activism from China. All the uncertainty has the stock down slightly.
All right, PayPal's starting to flag at the highs now.
Up 8%. Are you a buyer here, Mr. Munson?
No, it's been my biggest disaster in my book of any individual stocks I've had since the lockdown. My core thesis wasn't any of those problems you mentioned. They're all real. My biggest thesis was that parks were always going to remain strong. They always had pricing power. They could always raise their ticket prices.
Okay, so XLF looking good. It's sitting on top the 50-day after a 4-day fade. Looks good.
I don't care how much streaming costs. I don't care how many streaming is going to be profitable. I'm just done with the stock. They need the best CFO in Fortune 500 company to help run a company that should run its own. It's just, I'm done.
What about when people say, the whole idea of buying when there's blood in the street or when it's hated? I mean, is self-loathing a good criteria for buying?
Yeah, probably, I think, could it pop? Could they beat earnings? Sure. I'm thinking about structurally going forward. I don't think that content is going to pick up the younger generation. So on a secular basis going forward, I think they're going to have a lot of great success, but no profits in streaming. And I also think that the idea that this brand has this huge moat around it, and the kids are going to glom on to Star Wars and all the Disney princess, all this stuff, I think that is fundamentally flawed. That was my thesis, and I'm telling you my thesis is fundamentally flawed. It doesn't mean you can't make money in the next 6 months. I'm saying if you want to hold this for 3, 4, 5 years, you got to believe the brand is there. I don't think the mouse is with the kids anymore.
Well, Julia Borston has an exclusive sit-down with Bob Iger at Disney headquarters coming up in the 4 p.m. hour today. Very much looking forward to how he's going to defend the company's strategy here. Let's quickly talk about Affirm. Buy now, pay later. They could benefit from some consumer weakness, but Compass Point writes, high rates should pressure volumes, loan sales, and rising delinquencies remain a risk. Shares have doubled over the past year, still well off the highs. You be a buyer?
I'm really interested. Now, I want to become, I'm a value-oriented guy. So companies that lose this much money, I want to say buy, but I'm hesitant. You need to do your own research. Here's the thing. A lot of analysts are just so cheap on the firm. It's not a commodity. They have a unique business model. Amazon picked them for B2B for a reason. People don't like math, and Affirm, you least know what you're into when you're doing these payments. They have flexibility that the Visa MasterCard doesn't. So I think people are analyzing the stock all wrong. The issue, though, we've got to hear from management about operating.
Okay, let's go look at sector rotation. We haven't looked at rotation in a while because most sectors were oversold. To start the week, most sectors were oversold, so just about everything looked like it was going to turn higher. Okay, let's go to 6 months and the daily first. Let's look at the daily. Okay, we can see what is strongest at the moment. XLU is leading, pulling back. XLP, XLK. Notice how XLK went from weakening to strengthening and heading back towards the green area. See it? Okay, the tail is pretty short, so that's telling you it's not a lot of momentum. XLE, look at the length of the tail on XLE into the lagging sector, XLE. XLY, consumer discretionary going into year end. Look at the length of that tail, looks pretty good. XLRE, real estate was off yesterday. It was the strongest sector last week. And the reason being, think about interest rates. If interest rates if the yields start to come back in a little bit, people will flood back into real estate, interest sensitive REITs, and builders. Builders are part of the consumer discretionary sector. So let's look at XHB. Okay, that's flagging, so that looks okay. Nail, another ETF, Nail. Okay, Toll Brothers. Okay. Now, REITs, let's take a look at some REITs. REITs, real estate investment trusts by charter, they're supposed to pay you what, 80 to 90% of dividends come to you as shareholders. Let's see who's got the best record here. And let's go to 1 month performance. 1 month performance, American Tower. All right, so Scott B, as in Bravo, Scott B, I think you're in this, right? American Tower. That made a nice move. Okay, BTR, the Vanguard REIT. Oh, no, that's Ventas. What is Vanguard? Vanguard has VNO. No, that's Vornado. What's the Vanguard Real Estate REIT ETF? Anybody off the top of your head? Vanguard REIT. Let's see. Vanguard Real Estate. VNQ. All right, VNQ. Duh. VNQ is all right. Let me save that into the REITs. That should be in here already. It shouldn't be. Okay. So back to the REITs. Okay, ranked by performance. Tanger Factory Outlets, we've got 2 near us. That looks really good. I mentioned this a couple of weeks ago that, that bounce, the double bottom. If we got back above that double line, I drew that in 2 weeks ago, that if we got back through this area, we could look for a breakout. So that looks good. Tanger Factory Outlet, SKT. Weekly, let's see what the weekly looks like. All right, so the weekly looks very strong. You got a bullish 10 EMA on Tanger Factory Outlets, bullish 10 EMA on the weekly time frame. Since the turn in September of last year, this has been making higher highs and higher lows. Now, if you break this down, look at this for a second. I want to break this down. Let's see. Let me show you what I'm thinking here. All right, so you got to move higher, and then you got consolidation, right? Move higher and consolidation. What do you think the next move is going to be? It's probably going to be a move out of consolidation, right? So if it's a move out of consolidation, is it higher or lower? Right now, we've got the last 2 weeks. Last 2 weeks. All right, that looks good. Okay, so that looks pretty good. Consolidation. Do we break out? That'd be kind of cool if we did. Okay, so that's Tanger Factory Outlets. Okay, cool. Chemco. Chemco, they have a lot of retail and other REITs in the Northeast. I believe New York, New Jersey, Connecticut, and maybe Massachusetts. I think there's a lot up there. Chemco. All right, so higher highs, higher lows. That looks okay. So far, Simon Properties and Vornado, those look pretty good too. So I want to just keep an eye on the ones that are performing the best over the last month. DLR. Now this is 24/7, 365 server farms, cloud, etc. That's what they do. They buy properties and retrofit. They fit them out for electrical and server farms and cloud base. That's what DLR does. They've been around a while.
I don't think there's a ton of conviction in making that declaration. I think it's about looking at that chart and saying, yeah, that's a plausible peak.
Eli Lilly testing the high of the day. Lilly testing the high of the day. All right, Eli Lilly testing the high of the day. All right, so look at a couple of more of these, and then we'll get off of this. Site centers, they have landscaping and anything related to outside. Look at the volume the previous week. This one looks ready to go.
Begin by asking you a question similar to the one I just asked Mike Santoli, and that is, what is the relationship between yields and tech shares, or yields and the NASDAQ? We've seen the NASDAQ go up, yields went up.
All right, so Lilly's about to take out the high of the day. Lilly's about to go.
And what that means is that the value of those technologies, that technology sector, the share price, if you will, it's tied up in earnings that are going to happen years and years from now. So those earnings are going to be hurt if you raise the interest rate and you discount those back. It's going to they're going to behave.
What time is it? It's a little bit after 2 o'clock. 2 o'clock on the East Coast.
For example, they're also going to be big beneficiaries of receding fears about recession. And that's what happened this year. That was the dominant story this year. And if you look at tech earnings, the expected earnings have ratcheted up about 14% this year, and you can't say that for the rest of the S&P. So ultimately, yes, they're still.
All right, Lilly, high of the day.
A headwind if interest rates climb from here, but they're going to benefit from things like a stronger economy, higher earnings like they did this year, and that was the overriding factor for tech this year.
So in short, other intervening factors have overwhelmed the normal state of affairs, which would be that rising rates are not good news for tech stocks because it reduces the value of future earnings.
Yeah, there's just a lot of moving parts here. It's not just a one-way thing about interest rates.
All right, Lilly breaking out. Lily's breaking out. There goes Lilly. PayPal looks good too. There goes Lilly. Lilly on the move. Okay, there goes Lilly. All right, so here's the high of the day over here. All right, we're breaking out. Look at the volume.
Where stocks fell and bonds fell as they did last year, then diversification wasn't with Brendan. You didn't have much of a yield to start with. But that's different now. we do have a yield that is very favorable. It's above the rate of inflation, so you have a real yield. It's bond investors are coming into it today with a very different setup, and the historic tendency, although not all times, but the historic tendency for bonds to be the offset to a worsening economy, that could still very much be on the table. So the potential for diversification and a better starting yield means that absolutely the 60-40 traditional stock bond mix is very much alive and well.
Oh, now that's the most contrarian thing I think of. You know what David Imore just said, Kevin? He said basically he's betting the opposite.
Yeah, well, I disagree. I take the other side of that. Things don't stay static.
All right. NVIDIA going. Don't forget about NVIDIA. Don't forget me.
Ultimately, if you're starting with a higher yield, all else being equal, then the expected returns on bonds today would be better than where they were a couple of years ago. So I would take the other side of that trade.
All right. What have the stock picks here having comments?
There goes NVIDIA. Woohoo! There goes NVIDIA. Tesla.
This year, where we could still earn a fair return, maybe even see some income vis-a-vis a dividend. And all three of these stocks, Accenture, a very interesting, solid company with a tie into technology and the transformation of businesses as it relates to AI. Cummins, very strong business, lots of demand today and well into the future. And then Clorox is a bit of a turnaround. They've stumbled recently. They've had some issues. But ultimately, the stock is...
All right. What's Dell doing? Dell taking off to the upside.
Well, I think if it finishes out where it is there, I think we will have had a good year.
All right. So Dell launches a new service for Microsoft 365 Copilot to speed productivity and efficiency.
This year, and we had stability after an awful 2022. I would chalk that up as a win. So if the market were to close exactly where it is, I'd be happy with that. That being said, there has been some positive dynamics. Maybe we get a little bit more of a push higher out of that. But I would say that even if you closed it today and just ended here, 2023 would be a win.
Okay. 11, 10.
Let's get now to that big drop in oil, which if it holds could be deflationary for the global economy. Took a seat as this here. Will it hold?
Yeah, dropping again today, building on yesterday's losses. We saw oil tumble to the lowest level since July, and Brent now actually below $88 for the first time since July. Latest catalyst is the EIA cutting its U.S. consumption figures.
All right. Getting a nice little bid into end of day.
Now, in terms of what this means for consumers, we are seeing the drop in oil reflected. Prices at the pumps, they are down about 30 cents over the last month. Now, there are a couple of things going on here. So first, on the supply side, inventory for gasoline is about 2% above the 5-year average, while inventory for distillate is about 12% below the 5-year average. Now, that's important because refiners are still making money off of the higher margin products like the diesel, the heating oils, and the jet fuel. And so they're still running at high utilization rates, and they can't really shift their products. Which is why we now have all the supply just as demand is falling. And so that's the key thing to watch here. Okay, well, so the EIA pegs it to consumers not commuting, more fuel-efficient vehicles, and more EVs on the road. And they actually think that next year we're going to see the lowest gasoline consumption per capita in 2 decades. So that was the EIA's first call. We'll see. I mean, it's very hard to predict consumer patterns, but for the time being, something we're down 40 cents a month, so it's certainly good ahead of the holiday season.
That's gasoline.
Gasoline, yeah.
The underlying commodity consumption is going down because why? Because the heating season is not predicted to be as intense.
Yeah, that's right. So in Europe, their storage is already full, and they do about 40% of our heating is from heating oil, and we are forecasted for warmer temperatures, and so that's impacting diesel a little bit. Also, if you have
Let me get this. All right, so that's another thing squared away. I'm getting so efficient today. So much efficiency. Beautiful. Mm-hmm. Okay, what's PayPal doing? PayPal's been having a good day. PayPal. Okay, that's at the high of the day. PayPal. I wish PayPal had a nicer looking chart. I really, really do. But when you look at PayPal, you'll see what I'm thinking. It really needs to prove itself. All right, PayPal. Okay, so look at the configuration of the moving averages. Now they are turning, so this is early, and volume picking up, so that's a good sign. MACD and stochastics turned up this week, but the 50-day is still pointing down and to the right. So is the 200-day, the dotted gold-colored line. So if this is going to work, it's probably going to take a couple of weeks. See these volume by price bands on the left side of the chart? As we ease up towards the 50-day, the resistance starts to get a little bit more sticky. I don't think we're going to make it through 60 to 62, but we could see the 50-day, maybe a pop above the 50-day. I would sell into that if you have short-dated options that expire in the next few weeks. Volume does look good, MACD, stochastic, RSI. So maybe we'll get a follow through because some of these credit card processor old school like American Express are starting to pick on the fintechs and taking business away. American Express looks pretty good. You got a W-shaped pattern. The right leg of the W is a little bit deeper. The rule of thumb is bears take control. Bulls try to take it back. It hits the 50-day, gets rejected. Bears take control again. They drop it down. Bulls take control, pushes higher. Now, who wins this battle through the second week, third week of October is which way the trend's going to go. Most likely continues higher, but we have to take out that wick and that bullish candle right there at 154. We're above 154 now. We're above this candle now inside the top. So I'm looking for PayPal, AXP, and others to continue higher. Okay, MasterCard, similar price action. MasterCard looks really good. It's already through this October peak. You see that? The third week of October. We're through that little lower high. That looks good. Volume picking up. Look at the volume. MasterCard volume.
But do keep in mind, the Fed can control only a portion of the yield curve, short rates. They can do QE, but now they're not. They're doing QT, the exact opposite. So the market can do whatever it needs to on the longer maturities, and that seems to be the story
Visa. Visa. Same thoughts. AXP. Capital One Finance. COF. Okay. Okay, you're looking at NVIDIA there, Russell? Okay, NVIDIA. Okay, so there's your October. That's your October high. So this one here as well is giving you that W-shaped pattern. So who is in control? Who is in control? All right, so that's the way a W-shaped pattern works. Let me see if I can get this a little bit more pronounced. Okay, there you go. That looks a little better. All right, so let me mark this up. NVIDIA. W-shaped pattern.
Is Apple merely lying in wait, ready to jump in once the technology is perfected? AI, that is, and that is next. Plus, Disney has its hands full, and not in a good way. Now, Bob Iger is dealing with a stock that's stuck in the mud. The changing media landscape and a looming activist fight. We will discuss all of that and more Disney with Power.
Okay. Okay, looks good. Let's see, 218, yeah. Okay, just want to check one thing before I post this. I hope everyone's having a good day. It's beautiful here on the East Coast. Let's see, NVIDIA, November 21st. Okay, so NVIDIA reports on November 21st. That's 2 weeks from now. Tuesday, 2 weeks from now.
there's a simple answer why Microsoft is closing that market cap gap with Apple. It just ignited a promising growth engine thanks to that relationship with ChatGPT maker OpenAI. Meantime, Apple is coming off that full fiscal year of declining sales and projected little to no growth for the current holiday quarter. And there's no clear growth catalyst on the horizon. That Vision Pro headset coming out next year, that's not going to cut it. Microsoft showed us when it reported earnings just last month that all that AI activity is helping boost growth for its Azure cloud unit. On top of that, just started selling its AI assistant Copilot to business customers last week. Huge revenue opportunity there. Apple now is reportedly working on its own generative AI products that could launch as soon as next year, but for now, it has nothing to offer. Now, there's been this tit for tat between these two companies over the years. Let's go all the way back to the Zoom. I think you broke one, Tyler. A failed response to the iPod. Exactly. And then the Windows Phone failed against the iPhone, of course, and Windows 8 failed against iOS and the iPad. Now, it wasn't until the Satya Nadella era that started back in 2014 that Microsoft stopped chasing Apple and instead focused on services and the cloud, all laying that groundwork for the AI boom we're seeing today, guys.
This says to me that Microsoft does well when it sticks to its basic foundational knitting.
Cloud.
That is software, cloud, services, things like that.
Don't try to buy Nokia. Don't try to take on
Don't be a
Apple.
device company.
Right.
Don't be a device company. You're going to lose to Apple, which is a device
And that's what Nadella came in and very smartly did. He said, from day one, I'm going to come in. We're going to be a cloud-first company. And at the time, that sounded kind of boring and not as exciting. But boy, has it paid off 9 years later, right? Here we are talking about the most exciting technology in the world.
All right. So NVIDIA watching that one. PayPal starting to see a little profit taking. Okay. So they'll come in waves if they continue. If this is in fact buybacks that we're seeing, it'll come in waves. All righty. It's a good day. It's a nice day.
Symbiotic relationship going there that Apple doesn't have anything analogous to.
Though I do find myself using the Hey Siri. Oh, I shouldn't have said that.
Oh, you're going to set it up. Go this way. Yeah, there she goes.
Okay, so we're looking pretty good here. We got a cyan colored bar on NIMO, or rather on TTM. Looking good.
Siri sounds awesome. Who wouldn't want to use that on their iPhone? And it keeps you away from, if you don't want to be in a certain ecosystem and you like the Apple ecosystem, maybe that's good. But again, we don't know exactly what they're working on. It could happen next year, maybe even later. But I do know what Apple does with Siri. They don't like it giving you the wrong answer. And that's embarrassing for them. For such an image-focused company, they're going to want to make sure it's pretty close to perfect before they release it. Alexa gives you yeah, it's really good. But you want to talk about selling, they're going to supercharge Alexa next year, and you can pay Amazon for a kind of ChatGPT. It's not ChatGPT, it's different technology, but more like ChatGPT than what Alexa is kind of wonderful answer.
Sometimes I stump ChatGPT. It says I can't help you with that.
Yeah.
Well, I don't know if you stumped it or if it says, well, they not want to give me the
Do you
answer.
ever ChatGPT yourself?
No, I've never done. It seems so.
It's better. It got me better than Google does. Oh, is that right? I'll do it when I'll let you know. let me know. Yeah, see if I pass. Yeah. Okay. That's exactly right.
Thanks, so I really appreciate it. Finding a successful brief is no small feat, especially in the current environment. We'll talk further ahead to the CEO of Real Estate, which is up 6% in a week and fresh off a big acquisition. We'll be right back on Power.
All right, so Apple pushing a bit higher through VWAP. Okay, so all the FANG stocks look pretty good, except maybe Netflix and yeah, Netflix is taking a break. NVIDIA. For the most part, everything looks okay. We got 4 out of 10. 4 out of 10 are red. Considering where we've come from, I keep saying that, but considering where we've come from since Monday, Tuesday of last week, they look pretty good. All things considered, looks pretty good.
Welcome back. Time for a quick power check. On the positive side, Take-Two Interactive climbing 6% today in anticipation of the highly awaited Grand Theft Auto 6. On the negative side, Warner Brothers Discovery plummeting 17%, below $10 a share after ad revenue fell significantly for the media company. And CEO David Zaslav states they are undergoing a generational disruption with a streaming service that's losing billions of dollars. That's the power check.
All right, ahead on Power Lunch. More stocks in the news. Earnings, streaming company as well, due out after the bell. We'll talk to an analyst about what to watch for. And Eli Lilly shares moving higher as the company gets approval for a drug to treat obesity. Power Lunch will be right back.
Okay. NVIDIA just chugging along. People that shorted Apple about an hour ago more than likely got stopped out. I'm just watching this service, and that's all I'm going to say about it. The people on the service, I'm just checking them out.
The rapid border crossing between Gaza and Egypt closed today for an unspecified security circumstance. State Department officials say they're working with Egypt and Israel to get it reopened. Crossing is the only entry point for aid to Gaza, and it is serving as an evacuation point for seriously injured civilians and foreign nationals. It also closed over the weekend after an Israeli strike on an ambulance that was headed to Gaza. And it was a difficult start to the year for air travel, at least judging by the number of complaints sent to the Transportation Department. New data shows the number of consumer complaints the department received in the first 3 months of the year was nearly double the amount during the same period in 2022. They have stayed high for April and May. Tyler, back over to you.
Gabriel, thank you very much. Shares of Disney flat ahead of its fourth quarter and full year 2023 results in just a few hours. It's the first time the company will report earnings after reorganizing its business into three core segments: entertainment, parks, and sports. Of key interest are whether ESPN will want to turn direct-to-consumer service and numbers from its streaming business after Disney Plus and Hulu raised prices for a second time this year. And did it so just that. Joining us now with more, Brett Feldman, who covers U.S. telecommunications, cable, and media at Goldman Sachs. Let's talk a little bit about their streaming business, on which they have made a very good job. How does Disney Plus
Do. All right, so Disney, Disney. All right, so we're getting a little profit taking off the high, so that was a nice little run up. Let's see. All right, so Disney has earnings tonight, right? Disney has earnings tonight. Okay, New York FANG index. I'm just looking at the New York FANG. We technically broke out on Monday, followed through yesterday into today. RSI is still climbing. That's telling you the strength of this trend is improving. Very difficult to short these FANG stocks. Sometimes you get a good signal, but all of these are still moving up and to the right. It's tough to short that.
Well, I think Disney would agree that they haven't done as well recently with their major films. We run this analysis. If you go look in the last 15 films that have come out, particularly those associated with major franchises, they've generally done 20 to 80% less revenue at the box office than we saw with prior installment of those films. And Bob Iger, who returned to Disney about a year ago, made it clear that improving the creative output is of overwhelming importance.
PayPal still flagging. Lilly did make a new high and seen a little profit taking, expecting that maybe we'll see some institutional volume, maybe the next couple of days. All right, so okay, so the most recent two occasions where New York FANG index stochastics got above 80 and started to move sideways. We had a little divergence here late August into September and a peak and a quick reversal in the second week of October. So in both cases, you can see this one in August. We still continued higher for a few more days and actually made a new high, even though we had divergence. You see that? Let me show you the divergence here. Okay, so we had a divergence in RSI right there, but yet prices continue to move higher. So that was a divergence there for a couple of days. This one we peaked and just turned around. So let me see what that looks like. On this one, we peaked right there. Actually, it was pretty soon thereafter. Okay, so let me change the color so it's a little easier to read. Okay, so there's that peak. There's that peak there. Okay, so there's that peak. Okay, so now we're peaking. Okay, so look at RSI in each case too. RSI peaked and started to turn. RSI peaked and turned. This time RSI is rising. Now I'm just making nuances. This is by no means a reason to go balls to the wall long, but I am noticing that RSI is a bit stronger than last time. Kind of like over here in April. You see April where we started to move higher and reluctant to pull back. And we just continued higher. And then when we got embedded, we created what's called a market muscle, RSI muscle, where it looks like a bicep in profile. Okay, so I'm watching very closely what RSI is saying. Momentum on MACD. Is that making taller histogram bars? Yes, it is. Yes, stochastics embedded, but that's only one of three signals next to price. So I don't know. Your guess is as good as mine. I'm just watching the charts for now. I'm much more interested in selling credit spreads and collecting premium at the moment until we start trending. We've been trending down for 3 months. So now we're looking for a push to the upside and for a trend break. So we got to get through 4,400. S&P needs to get through 4,400. Okay, S&P needs to get through 4,400. And we're just right at VWAP right now. Okay, so if we get above 4380, that would be a good setup for tomorrow. VWAP is flattening out. This could go either way right now. So watch the FANG stocks. That generally gives you a good idea what to expect. There goes Apple. Apple's starting to push. Something I just noticed on NVIDIA. Something I just noticed on NVIDIA. Let me show you what I'm looking at here. Where'd you go? Where did you go? There we go. Okay, so let me show you what I was looking at on NVIDIA. Okay, so I'm about to show you NVIDIA. All right, so here's NVIDIA. All right, so look at the volume. We have to get above 476. We get above 476, that will mean that the bulls are in control. Okay, W-shaped pattern, pretty well known. It's like one of the top 3 patterns: cup and handle, W-shaped pattern, and bull or bear flags. Those are pretty well known. At this point, the volume has got my attention, and RSI, which continues to climb. 476, and we're only day 7 into this run off of the low. We got a hammer at the low on NVIDIA, and the volume comes in. We got the capitulation on that hammer. You see that? Okay, that hammer right there. Okay, look at the capitulation, red volume. The very next day, what happens? Volume picks up and we shoot up to the upside. Then we follow through and we continue to follow through, and the volume continues to build in a stock that many would say is going to profit quite a bit from AI, if not be the leader as far as hardware is concerned. Dell is making machines. Dell is making machines to capitalize on the AI trend. Let's see what Dell looks like. Dell, is it bullish or bearish, Dell? For now, Dell is making new highs. Okay, I have a bull put credit spread. I sold the 71, bought the 70, I believe, on Dell. And that's for Friday. So if Dell continues in this direction, it looks like these puts will, theta's going to kick in if it hasn't already. Yeah, theta's kicking in on Dell.
Is this likely to be the biggest selling drug of all time?
All right, Dell looks good. Okay, so NVIDIA, you know what my thoughts are on NVIDIA. Some are shorting NVIDIA up against that 376 resistance, 476 resistance, sorry. We haven't gotten there yet. Not a bad setup for resistance. All depends on what price does at this point. Intel had a nice day earlier this morning and it gave it back. It looked really good this morning. Now it's starting to turn the corner. So I like to look at these stocks that are normally, for the most part, bullish. And then look what's happening during between 12 and 2 o'clock. If you're thinking about Intel, this is where I'd be buying. Not at the high of the day. I'd be waiting. What's Microsoft doing? Microsoft, higher highs, higher lows, back above VWAP. Apple, higher highs and higher lows on Apple since 12 o'clock, back above VWAP. NVIDIA, higher highs, higher lows, pushed off of VWAP, and is at the high of the day. Snowflake is off $1.85. Snowflake, but has started to turn. Snowflake. There goes Netflix. Netflix is on the move. There goes Netflix coming off the low. Netflix. Netflix coming off the low. Back to VWAP. Google. Above VWAP, up and to the right. Pulling away from VWAP.
I would argue that the supply chain challenges are going to run for probably quite some time. Even on a recent conference call, you heard Novo say that, from the differential between the demand and supply situation, the demand is so strong that Novo actually sees at least 4 years ahead of, sort of a supply constrained market. And I believe Lilly would argue, largely the same. So the demand is quite extraordinary, certainly nothing that I've seen in my 20-year career, and definitely a very unusual situation, and one that has to be managed carefully by both companies to, maintain their strong reputations.
All right. Jim, thanks for joining us today to digest the news. We appreciate it.
My pleasure.
Still ahead, the read on rates. We will speak to the CEO of Realty Income about demand for commercial properties, rents, and its newest acquisition. Howard Lynch is back in 2.
All right. So we got a little bit more than an hour and 13 minutes to go. Hour and 12 minutes to go. And, the FANG stocks, they were worse off around 11 o'clock, 11:30 than they are presently. Grover's list is more green signals. I see more green signals. And futures continue to ride the 105. That's not a coast highway. The 105 looks good. Need to get above 43.98. Okay. So keep an eye on the FANG stocks. If they don't show a lot of profit taking, then we might see a little bit higher prices on the futures. If we start to see a lot of profit taking, like ServiceNow is at the highs of the evening session, Meta just peaked at the highs of the evening session. If that starts to show more profit taking, then yeah, we could probably hold here or pull back a little bit. Let's take a look at where we closed yesterday. Okay. So we closed at 43.78. We're currently trading 43.78 exactly on the cash. Okay, 43.78 cash. We're right where we closed yesterday. So that's interesting. 43.78. Call walls at 4,400. Okay. The volatility trigger, we want to stay above. That's 43.45. So, I don't know. Looks fine to me. Looks fine to me for now. So 43.78. A close above 43.80. Not a big move today. At the close, from close to close. We did have a dip. We got a flat VWAP now. All right. There's not too many ways to parse this other than to say it could be a lot worse. And we just came off of 3 months of fade, if you will. Let's look at the number of stocks trading above the 50 today. That should tell us a little bit more. NVIDIA fading a bit more from. All right. So Russell shorted NVIDIA pretty much at the high of the day. So that's good. Nice trade there, Russell. Okay, we're about $5 off the high of the day.
And joining us in an exclusive interview is Sumit Roy, CEO of Sumit. Sumit, it's great to have you. Welcome.
Thank you for having me.
A lot of familiar names in your portfolio, starting with your company. You've got a lot of Dollar Trees. Is it the
$2? About $2. Sorry, about $2.
It does. We're primarily a retail-based, net lease business, but we do have a couple of investments in the gaming sector.
All right, so the high there, that evening high was about 468.60. We're at 466.60, so about $2 off the high. So I misspoke. Okay, Apple fading a bit more now. Apple's still up 75 cents. Oh boy. Let's see, what time is it?
Generate, north of 2.5% accretion on the AFFO. With the backdrop that we are experiencing, that was very critical to be able to construct this transaction in a way where there was zero reliance on the public markets to effectuate this growth. And the reason why we believe that the portfolio itself is very complementary, I would say about 70% of the exposure that they have to operators, we have it in our portfolio as well. And the enhanced diversification benefits that we get, the 18 of our top 20 clients, basically we have a reduced exposure to them post this transaction closing, as well as if you look at 9 out of the top 10 industries that we are exposed to, we also get diversification benefits there. So all right,
BFS, you guys familiar? That one was that Vietnamese EV maker that went IPO. Starting to turn the corner. Volume is picking up. It's almost 5 million shares. About 4 times normal volume, it looks like. BFS. Highly speculative trade. BFS.
I would say about 70% of the portfolio, we do have exposure to the same clients, and 30% we don't. But given the level of exposure they have, the pro forma company for us, it allows us to diversify even further. And so, for instance,
even though 70% of your clients are the same.
Yes, it is, but they had much more bite-sized exposure to them. So pro forma, our exposure to somebody.
Our vol is 2 times normal.
Top 3, top 4 client, that might be
BFS.
for them. And so it allows us to diversify.
I assume your answer when I ask this question will be that you have a very highly diversified client base. But when I look at a company that has had some recent stumbles like Walgreens and maybe closing stores and so forth, when one of your portfolio lessees stumbles, how does it affect your business?
Well, let's talk about Walgreens. We are in very long-term leases with Walgreens. So the assets that they tend to close are assets that they control or assets that have lease expiring. Walgreens is going through a transformation, and obviously through this process, they have the overall crisis that they have to deal with, etc. They've got new management that's coming in, so that's creating a little bit of volatility in their business. But having said that, it is still a very healthy business, generating $600
Oh boy.
million of free cash flow. So, the risk that we're seeing at Walgreens is not going to translate to their inability to pay rent to companies like ours. It's just they're going through a transformation which hopefully over time will stabilize.
Very interesting conversation. We hope to have you back again soon. Appreciate it.
Thank you.
Coming up, back to school. A congressman taking a page out of the Rodney Dangerfield playbook, enrolling in AI courses to better understand the technology. We'll get the story when Power Lunch returns.
All right, so all right, I hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is a glorious Wednesday, the 8th of November. Can't believe this year has gone by so fast. Let's see.
Welcome back, everybody. Congress notorious for lacking knowledge and emerging technologies, but one lawmaker is bucking that trend, going back to school to get a better understanding of AI. And with us is in Washington with the story. Interesting quote coming.
Hey, Tyler. Well, yeah, 73 years old. Don Fire is not the typical college student. He prefers notepad and pen over a laptop. He's already got a full-time job, and he's a top lawmaker on AI policy. Fire's curiosity about AI led him to take classes on computer science and machine learning at George Mason University. Fire said the classes have helped him better understand both how some of the technology works and how risky it can be.
And I think with every additional course I take, I think I have a better understanding of how the actual coding works, what it means to have big data sets, what it means to look for these linkages, and also perhaps what it means to have unintended consequences.
Fire is one of the leaders of the New Democrats Coalition AI Working Group, which is digging into how AI and social media companies are preparing to handle deepfake images and videos around the 2024 election. Fire said it was important for Congress to try to get ahead of some of the potential worst-case scenarios.
What we're trying to do is not replicate our failures on social media, where for 20 plus years, we've not regulated it at all.
Social media organizations are already working on how to handle AI-generated images and videos. Meta announced new policy today requiring any political advertisers to disclose if they used AI software to detect people or events. And Tyler, we'll have to see exactly how much of a role this does play in the upcoming election.
It almost feels as though a seminar or a course ought to be required for people.
For a lot of lawmakers, they have done a couple classes. A lot of them are bringing in experts, but Fire's really, I think, going the extra mile here.
All right. Futures fade back below the 105. All right, so we profit taking back below VWAP, flat VWAP. So we're anticipating that we'll close somewhere in here. We closed at 43.78 yesterday and change.
In the meantime, this make or break hour begins with a reluctant bear no more. A top CIO changing his tune on stocks. I'll tell us why in just a moment. Here's your scorecard with 60 minutes to go in regulation. The major averages are trying to extend their longest winning streak in 2 years. You can see we got a little work to do as we begin this final stretch. Energy stocks, they're a drag again. Crude falling further today. Take a look. There's the XLE, and there's WTI below 76. Pretty much a mixed picture for the mega caps, though, as you see them most green. We do have Amazon, though, modestly in the red. The Apple run continuing today. As for yields, mostly lower today as well. We'll show you the Treasury curve there. You've got the 10-year at 452.
Okay, Apple just below VWAP. Snowflake, a little pop there. So we, for the most part, up higher highs and higher lows on all the FANG stocks.
Scott, we bought stocks. We closed our underweight. It wasn't a large underweight. It was a little less than 1%. On October 27th, when the S&P went to 4,100, down 10%, with sentiment indicators down by 1 standard deviation. I told you I'm waiting for a pullback for a better price. And these are large portfolios. We have about $3 billion worth of stock, and we were down by Monday. Average execution price 41.35. And we're now neutral, fully neutral between stocks and bonds. We have some interesting positioning under the hood still, however.
Okay, so you bought $3 billion worth of stocks. Can you give us an idea of the types of stocks you did buy?
So for us, we went diversified. We are neutral between value and growth. We are overweight small and mid caps. And that's interesting because,
Yes, it is interesting.
the S&P equal weighted is flat to down 1% year to date. Your Magnificent Seven is up 92%. So we think there's an opportunity to get more diversified in stocks over the next 6 to 12 months. So that was part of the positioning we went into.
But I mean, if you're overweight, small, and mid, you must be in the soft landing camp then.
I think soft landing is the base case. You have to balance two things right now. And it's actually, we're going back and forth with all the narratives. The narrative changed last week, right? And the week before was different. It's like narrative ping pong. But it comes down to the fact that growth has been surprising on the upside significantly, which you and I have talked about, versus the fact that
Not much to do. Nvidia fading from the high. Amazon.
I mean, the narrative may have changed a little bit, but the risks have not really. You still have the risk of higher for longer. Some would say,
Amazon, flat VWAP. Microsoft, flat VWAP there. Nice run up in the morning, but flat VWAP now. Bitcoin back to 35,007. Maybe Bitcoin does something overnight.
there's still upside risk for rates. I agree with you, Scott. Inflation, maybe the base case is that we continue to normalize, but the risk is to the upside. Oil prices down. The market is sort of calming.
Okay, what time is it? All right, so we got 56 minutes to go. 56 minutes to go. Snowflake is taken off to the upside. Looks like shorts covering more. Higher highs, higher lows on Snowflake. Tesla is off 86 cents. Looking for Tesla to be higher. Tesla. Flat VWAP. Most stocks showing flat VWAP. Price either above or below. Tesla's starting to push here. Watch Tesla in today. We got 55 minutes to go. 56 minutes to go.
Investor letter, short time ago. There it is, most recent one. And there are a number of highlights in it, in which he says, by the way, they're up almost 28% net of fees for the first 9 months. So they're having a great year. And they've had a diversified group of winners outside of the mega caps, which is interesting. Proving prowess of being a stock picker in this kind of market if you don't want to own the mega cap 7. Here's what he goes on to say. We are, and I'm quoting, we are effectively on a buyer's strike again and did not establish any material long positions during the quarter. It's a tricky time, and we remain worried about the direction of the market, which which brings us to geopolitics. Investors have been conditioned to ignore geopolitical risk. Apparently, these days, geopolitical risk presents itself as a small overnight.
VIX is at 15. So while there is concern about the markets, obviously this choppy range-bound action is uncomfortable. Doesn't look like traders are anticipating a big move. That said,
Geopolitical risk doesn't always matter to markets until it really does. And to me, the channel here is an expansion of the conflict in the Middle East
Snowflake still going.
would eventually impact oil prices, even if demand is coming down. A real supply
Tesla going. Tesla go time.
inflation that keeps the Fed in play, and on and on and on. You've heard sort of the bearish scenario quite a bit, but that is part of it.
I feel like Einhorn speaking directly to you. He says, quote, the complacent investor view is that geopolitics should be ignored might be true except for the times when it is.
All right, Tesla.
I suspect we are in one of those times. In other words, yes, what you say is true. However, we could be in one of those moments where we need to pay more attention to it for a true market impact than we otherwise might miss the story.
Yeah, I think now's not the time to be overweight stocks by 10, 20%, but now's not the time to panic and go all the way to cash either. And I think that's important because, yes, Einhorn's making a good
Ooh, let's see what showed up intraday. Forgot to check. Forgot to check.
in the long run, stocks pay off. And if you're investing for retirement, you want to have some money in one.
Are we finally breaking the cash is king, cash is a better alternative narrative? Or even environment, stronger than a narrative? Because we have been in an
Interesting.
environment where you're getting so much for your cash. People thought it was a better risk reward to be there.
What is AMC doing? AMC. There was a pretty good setup on an AMC. Bull put credit spreads. No, it's going nowhere. Daily looks okay. Nah, not interested. AMD looks okay.
In money market funds right now. That is $2 trillion more than before the pandemic. And that is the big question, Scott. Will it move into markets? Like us, when markets really pulled back all the way down 10%, we bought. I don't think that's fully happened yet.
Well, because there's still concerns about the economy, right? Which leads me back to wanting to be overweight small and mid-cap stocks when you're still in what is an undoubtedly uncertain economic environment. I'm trying to mesh those two thoughts together.
Yeah, and two things on that. The spread is extreme. The valuation for small and mid is basically pricing in a very hard landing. And we started the conversation by saying soft landing is probably the base case. So it's all about where they're priced, what the expectations are versus what we could get. Growth continues to surprise on the upside. We started Q3 with 0.5% expected GDP growth. And as you know, we printed 4.9% GDP growth.
Sure, but how can somebody who's been as cautious on the markets for as long as you've been now have a base case of soft landing? Have you recently changed your view?
Tesla.
Because it's going to be so negative for so long on stocks.
Snowflake is still going. I don't know what's up with Snowflake. Still going.
You had to be preparing for the idea we're going to have a recession. Now it seems you've changed.
Yes, and look, the soft landing scenario is not all rosy, and there are risks in the markets, including the risk of valuations. But incrementally, we have gotten more comfortable owning stocks. We bought more stocks when they pulled back. We're not day traders. We look 6-18 months ahead. We're asset allocators, but we can get pretty aggressive with execution. And when we saw the October 27th, the opportunity to buy stocks, we did, and now we're at neutral. It's not an exciting position, but it goes back to stay invested, stay invested.
Okay, Tesla. Can we pop through here and start to run?
So what do you make of what you've heard here from Sebastian, who is, you probably have known for a while, has been a reluctant bear, self-described, who now says, you know what, I bought $3 billion worth of stocks.
Well, look, I'm in that camp of being a reluctant bear as well, so I can sympathize with that. But
All right. Celsius. What is Celsius doing after earnings? Celsius, CELH. All right, tight, right around 190. Tesla, tight range. I thought we might see a move above the 21-day. It's been holding price action back for the last 4 days. RSI flattening out, so this might actually fade Tesla. Had a nice run the previous week.
Taking advantage of some of these short-term moves. Could the equity market end higher at the end of the year? It could. You've got good seasonality. You've got the Santa Claus rally that usually comes. But I think the slowing of the economy, the slowing of the consumer, what we think is going to be margin pressure and lower earnings for the fourth quarter sets us up for a pullback in the beginning of the year.
See, the hard part of this is that, the bears, Victoria, self-described yourself as a reluctant bear in that camp, have been paralyzed because they've missed the move in the market. They still see what are the perceived risks on the horizon and are still afraid to get more invested into equities. When are you going to be sure that the Fed is done? When are you going to be sure that the consumer is okay?
What a knucklehead.
By those moments, the market's already going to move so significantly beyond you. Then you're going to get more bullish on stocks?
I don't think you have to wait till you're 100% sure, but I think we need to see trends being a little bit better than where they are. The rally we've seen over the last week, I mean, is it a bull market rally? Is the start of a new trend? I don't know, but I want a little more data before I make a decision on that. I want to see, does inflation continue to come down, or are we going to have a little bit of a spike like we saw in Europe this week? We get CPI next week, we get PCE at the end of the month, and we're not saying be out of the market. If you've been in cash, yeah, then you've really gotten hit. That's a horrible play to have made. But we haven't been. We've been fully invested, just trying to position ourselves in certain segments of the market that we think will do better, and coupling that with some investments in the bond market, doing some alternative.
All right, so we closed at 43.78 yesterday. I'd like to see the S&P above that level. Cash. So we're starting to see some push, some buyers here. Futures. Cash, though, I'd like to see it above 43.78. We've basically gone nowhere today. That's a pretty tight doji S&P 500. Okay, so you can see where we closed right at 43.78, and that the top of that body of that candle, we're right at 43.77 right now. So a close higher would be nice. The volume, though, that's what got my attention. Volume over the last week going into the seasonally strongest months of the year. Looking at volatility, looking at this volume. So this is day 8 off of the low. Oh, boy. All right, so we got about 46 minutes to go. 46 minutes to go. Listen to these guys. They've been waiting for this capitulation, waiting for bad earnings, waiting. With Mike Wilson.
Then you start to bite with the rate hikes at some point, the long and variable lags, and the market could panic. And then I'll be sitting here with you, most likely saying we're buying because we like to lean against the wind. You'd be a reluctant bigger buyer. Or maybe, yeah. maybe I'll be a convinced bull at that point. But I just think right now,
I'll tell you something right now. When you turn convinced bull, you better come here first and tell me that. After being a reluctant bear as long as you were. Deal? Deal. You got it. Victoria, last question to you. Disney overtime. The earnings coming out.
Tesla,
What are your thoughts?
S&P.
We're not owning it in our more concentrated portfolios. We think there's a lot that you need to be watching here for the earnings. Obviously, subscriber growth, everyone's watching. Ad revenues is going to be really important. We saw that with Warner Brothers. But the key, I think, is the uncertainty around the structural and the management restructuring that's going on. Selling ABC, partnering with ESPN Bet, the Hulu purchase, all of these things. If they don't go exactly as planned, then I think you're going to see a lot more volatility in this stock. So we would probably wait a little bit longer, let some of those uncertainties pass, even if we miss a little bit of the upside, and then start adding to your position at that point.
All right, we shall see. It's going to be an interesting one. That's for sure. Victoria, thank you so much. Sebastian, it's great to see you in person. Always enjoy our conversation.
Thank you,
Sebastian
Scott.
Page. Joining us right here at Post Time. By the way, speaking of Disney, do not miss Julia Borston's exclusive interview with Disney CEO Bob Iger. That is in overtime just after the results come out. We can't wait for that. Speaking of, our question of the day: are Disney shares a buy ahead of the earnings tonight? You can head to CNBC Closing Bell on X.
All right, nice little rally back above 43.78. All right, so a move above 43.80 would be awesome.
Gross payment volume also came in fractionally below estimates. Switching gears, shares of Robinhood also down big today after the trading platform missed revenue estimates in the third quarter. You see shares down 14%. The company also reported fewer monthly active users and a drop in trading volume from the same period last year. The company though is also expanding in its earnings release. They said they will be soon launching a brokerage in the UK and will open crypto trading for its new EU customers. Shares down 14%.
All right, Christina Parks-Neville, thanks so much. We'll see you in just a bit. We're just getting started right here at Closing Bell. Up next, generating returns by investing in America's service members. That is the mission behind a first-of-its-kind ETF from Academy Securities. We'll speak today with the veteran-owned firm CEO Chance Mims and President NFL great Phil McConkey about the new fund's launch. It's next. We're live from the New York Stock Exchange. You're watching Closing Bell on CNBC.
All right, so we've got 42 minutes to go. Price action just sitting here stuck near yesterday's close. Apple stuck to VWAP. NVIDIA pulling back the VWAP, pulling back. NVIDIA high was what, about 468.70? 465.25. So we did pull back a couple of bucks on NVIDIA. Tesla back above VWAP. Tesla. Kind of a slow day. Slow. Okay, can we get a little run there on Tesla? Oh boy. Could be worse. Could have been selling off. Instead, we're pushing higher, higher highs, higher lows. Tesla pushing a bit higher. Would love to get back to 224 and change. Intel, I thought for sure we might see a follow through to 40. Intel.
It's a very special ringing of the closing bell here at the New York Stock Exchange today. Academy Securities doing the honors ahead of Veterans Day. The observance, of course, later this week. Academy, the only disabled veteran-owned and operating investment bank founded in 2009. Chance Mims is the founder and CEO, a former naval officer. He's with us today along with the firm's president, Bill McConkey, who served in the United States Navy and played for the New York Giants Super Bowl winning team in 1987. Great to see you guys. Great to have us. Thanks so much for being here. Congrats on the closing bell today. And goes without saying, thank you both for your service to this country. How Chance did Academy start?
Yeah, Academy started with a simple mission, to hire trained military veterans right out of the financial crisis in 2008. Taking a military veteran, putting him alongside a Wall Street veteran.
Come on, S&P, let's go. All right, Tesla pushing a bit higher.
We become the best in the world at the geopolitical intelligence group, made of 18 admirals and generals, and we tie together what happens from a geostrategic risk standpoint and how that affects the markets.
You offer a full range of financial services as well, correct?
Yeah, that's a full-service broker-dealer, and now we've launched Academy Asset Management, and that's where we've launched our ETF. That's something that's near and dear to all of our hearts. It's something that's going to really have a big impact on military veterans.
Yeah, tell us about the ETF. You guys are going to be ringing the close. I said, here's the hat that you guys will thrown out to the crowd. Here, tell me about the ETF.
I think first of all, getting into asset management was an issue for us. We did the broker-dealer side, but clients want to see minimum AUM and a track record. So we have some of our corporate clients that want to do more for us as we help veterans because we're helping them navigate, as Ken said, the geostrategic risk landscape. So we're adding value. So we started an SMA, and then we had some of our clients say, look, SMA is great, maybe an ETF, which we started that helps better invest in military veterans and also active duty for home mortgages. Sometimes in some areas like the New York metropolitan area, San Diego, it's expensive for veterans to get loans. This kind of helps lower the borrowing costs for those military veterans, and it's a Ginnie Mae backed security that we have just launched and real excited about.
So it's going to primarily invest in loans to service members, veterans, their survivors, and veteran-owned businesses as well.
All right, 36 minutes to go. I'm just scanning through stocks.
And everything else, and just how hard it is for everybody.
Yeah, no, I mean this is personal to us. Not too long ago I was stationed in San Diego on a guided missile destroyer, buying my first home. It was tough. The VA loan was very important to me. That enabled me to buy a home. By the way, that equity in my home got rolled into a company. I was able to take that and start a company. And so we're also investing in loans to SBA loans to military veteran-owned businesses. Access to capital is such an important thing. We need to have that access to capital in order to build our businesses. So that this ETF is historic. It's never been done before. It's personal to our group. And we've been fortunate to have some corporate investors like Virtue Financial, State Farm, and other corporations that have also invested in this ETF.
You've had an incredible career, Bill. It's football, serving a country, back to football, now to finance. How did this all happen?
You know what? Growing up as a skinny kid from the west side of Buffalo, I just had big dreams. And I remember hearing something a long time ago that stuck with me. I didn't come this far just to come this far. So, I think it's in life, you set goals for yourself and you have dreams and, you achieve them and you look beyond that to do more. But this is as fulfilling as anything I've ever done in my life. We've got teammates, transitioned military veterans. Look, the only war I was in was a Cold War. I mean, some of our teammates, they fought in real wars and they suffered a lot and they gave a lot. And for us,
Let me get this. It's my sister.
financial services to make that transition.
All right. Yeah, that was my sister. All right. So Dell looking pretty good. Dell end of day starting to see a little bit of more push to the upside. Buyers stepping up. Okay. All right, so Tesla, I don't think we're going to get through this area. Tesla, with 29 minutes to go, we're at the high of the evening session, but off the highs of the earlier morning session. And a little profit taking. I'm here. I'm just scanning through these stocks. As we push a bit higher, Dell looks okay. All right.
Welcome back. Just a few weeks away now from 2024. Hard to believe that. My next guest here to share his macro outlook on what we can expect. He says the hard part is over. Joining me now, Post 9, Goldman Sachs' chief economist, Jan Hatzius. Welcome back. It's nice to see you on Closing Bell.
Great to be with you, Scott.
I read your outlook here, and you sound pretty, dare I say, optimistic?
I'm pretty optimistic, and in part because we have seen such strong signs that we can bring down inflation to an acceptable level without really hurting the economy. I mean, 2023 has been sort of a proof of concept of that. We've seen very substantial disinflation across not just the US and the developed economies, but a much broader group of countries that saw an unwanted and large acceleration in inflation to an average of about 6% in 2022. It's back to 3%. There's still some work to do, but we're on a very good path.
You use interesting words in your outlook. You see tailwinds to global growth. So whereas others would be a little more worried about where the economy is going to be in 24, you use words like tailwinds. What are the tailwinds that you see?
The most important tailwind is real disposable household income growth, and that is really driven by inflation coming down very substantially. Wage growth also coming down, but coming down more slowly.
You're looking at 165.50. Okay. Let's see.
The other one that I think is important, the other question, whether
All right. IWM did turn back down.
We think the biggest negative impact is already behind us.
Interesting. So the labor market never falls apart. It slows, which, last month obviously was a positive read. It was one of the things that the bulls needed to see. So we continue on this steady but not stumbling path.
That's right. The labor market held up well in 2023. You take the average unemployment rate globally, it's been going sideways.
Merck just been doing nothing for days and days and days. Trying to grind a bit higher, Merck. American Airlines, American. Looking for crude oil to continue to collapse and for airlines to continue their mean reversion. Airlines. Cruise lines look good. The travel and leisure sector looks good if you're thinking about areas to consider.
We do expect a pickup in returns in credit. We expect a somewhat bigger pickup in equities, and then we're looking for commodity prices to recover.
Chewy looks like it wants to keep going.
It also sounds, I suppose, if you have this belief that the Fed returns to being our friend, so to speak, rather than our foe. Not only are they done hiking, but if necessary, they'll cut, and if necessary, they'll cut more than we might otherwise think.
Yeah, our baseline expectation is the Fed does nothing for the next year.
But
nothing. So you don't have any cuts?
we don't have any cuts in our baseline forecast because we have a pretty constructive forecast on growth.
Well, what about? But you also are constructive on inflation coming down back towards 2%. So wouldn't they cut even if inflation comes down?
We have inflation still a little above 2%, so that's consistent, I think, with the cut towards the end of next year. However, if things were to be weaker in 2024, if we saw an unanticipated, speed bump or maybe pothole in growth, they could cut in response to weaker numbers because inflation is now in a place that would allow them to cut.
We spent a good portion of this program today talking whether
All right.
we're citing at this
IWM trying to bounce. Tesla. Markets are just lethargic. We did have a decent amount of blocks come through. End of day, we had IWM with a 1 million share block about an hour and a half ago. 1 million shares, 1,100,000 shares traded at 170. That looked like a short.
So far, we haven't seen that broad escalation. Sure. If you look at energy prices, right now they're in a place that I think is consistent with continued growth.
Before I let you go, China, sputtering recovery, I think is fair to say. How much does that pickup hinge on your baseline forecast?
So we do have slightly better numbers over the next few months, and the reason is that the policymakers are stimulating, financial conditions are easing. I think that is going to give us continued growth in a reasonable place. We're at 4.8% for next year. That's a little bit above the consensus. The longer term downward trend in growth in China, though, I don't think is going to change. We are seeing.
All right, so
All right, I appreciate you being here very much. See you again. Jan Hatzius, Goldman Sachs. Thank you. Up next, we're tracking the biggest movers as we head into the close. Christina
Scott.
Christina.
Just going to upload this for you for Scott. Looks like somebody shorted from 170. 338. All right. I need to see IWM get back above 170. There was somebody that went short there, 1,100,000 shares. Okay, Chewy pushing higher. Chewy looks good. Chewy. Just off the high. Chewy looks good. Okay, what's Dell doing? Dell. Dude, you need a Dell. Dell's trying to break out. Dell's trying to go end of day. All right, you can see Dell. Oops. Dell end of day right here. Okay, Dell pushing end of day. Looks good. I'd love to see IWM get back above 170. There was a short there before. Okay, so there's Tesla's trying to go with 20 minutes to go, 19 minutes to go. There goes Dell. Dell looks good. Oh, I know where I have it. I know where it is. Okay. My sister asked me for a family tree that I have going back to the 1600s. Pretty cool. Pretty cool to see where you come from. All those dead people in your past. One day we're going to be dead too.
Well, let's start with shares of video game platform Roblox popping today after the company reported earnings that beat estimates. The company also reported daily active users and engagement hours were up 20% from the year earlier. The platform continues to grow among teenagers, especially in Western Europe and Eastern Asia. Shares are up almost 20%.
All right, high tech alert. Nice follow through.
After the bell today, the theme among many fintech companies this season is just how will they succeed in a weaker economy where spending slows down.
All right, so we're pushing back above. All right, so we got, there goes Tesla. All right, stock's going.
Christina, thank you. We'll see you in the market zone coming up as well. Christina Martinello. Last chance, by the way, to weigh in on our question of the day. We asked for Disney shares to buy ahead of tonight's earnings. Head to CNBC Closing Bell on X. The results after the break.
Kapow. There goes Tesla. Nice job there. Yo, did you take it? Nice job.
Extreme high tech alert.
Oh, boy. We have 15 minutes to go. 15. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Coming into the closing bell with 15 minutes to go. It's Wednesday, the 8th. And just watching Tesla pushing a bit higher. So we did get a nice little bump there. S&P, a lot of short covering. Dell, new high of the day. Dell. All right. Apple did pop. Google popped. Tesla popped. NVIDIA turning. Now that I think Russell's probably out of his position, we can turn.
day, we asked are Disney shares a buy ahead of earnings tonight in OT, and the majority of you said nope, 2/3. We shall see what that company delivers in just a little bit. Up next, we break down the key numbers to watch when Disney results hit in overtime, whether the report could spark another proxy fight from Trian's Nelson Peltz, that and much more, when we take you inside the market zone.
All right, we got 13 minutes to go. Just monitoring positions. Pretty strong performance today, even though we are still in a range, tight range. Tesla looks good. All right, Apple, a little profit taking there. Snowflake, nice pop. All right, 43.78 is where we closed on the cash. S&P cash, we're at 43.85. Paint it green. Let's paint it green. Okay, so this looks a lot better than this morning. It looks like Monday's candle. So a close above 43.78 would be awesome. The higher, the better. S&P. Come on now. Don't fail me now. S&P 500. That's not what I want to do. I want to do it over here. SPX. Okay. Come on, let's go. LATSGL, let's go. All right, the FANG stocks look like more shorts covering. Looks good so far. Tesla, bang it out, Tesla. Intel, what a dud. What a dud today, Intel. I swear, if it gets back up to 40, I'm out. Probably about the time it takes off to the upside, Intel. Intel looks pretty good on the daily for the most part. But it was a slug today. As usual. No momentum. Almost a bearish engulfing candle. So this is probably going to come back a couple of days. Maybe test 37. Then we have a shot at breaking higher. 921.50, 200. Everything's turned up and to the right. It's just lack of momentum. If there is a good thing in this chart, it's because the volume has tapered off. The pop, the gap up, and the follow through are all on higher volume. So that's a good sign. That's the only good thing about it. Other than that, it doesn't look that great. Overbought. Stochastic above 80. 9 minutes to go.
This afternoon, it's Eli Lilly getting a little bit of positive news, 4% up. By the way, Lilly's like a top 15 weight in the S&P by now. It's amazing how big it is relative to what it used to be. Yep. And then the rest of the market, again, is trying to just kind of regroup and digest. Another day of negative breath, which is okay. I mean, I guess if you were bullish, you wouldn't necessarily want to see regional banks down 4% week to date as they are, but it's coming off of that huge squeeze higher
last week. So you take the good with the bad. I think in general, it is much more about just sort of holding serve until there's another catalyst out there. And that's been, that has actually been the case, that the market is just doing enough and migrating toward the strength. The struggling parts of the market all year continue to be a little bit suspect in terms of the source of upside, but make it work other.
Yeah, I mean, it's
Oh boy.
as you said, is down another 1.5%.
Some days are more boring than others. Today was pretty boring. Dip and then follow through, grind higher. But not everything. Not everything. S&P.
Aside from NVIDIA, it really is the only one of the big seven that is truly covering new ground in terms of new highs versus a couple of years ago. And it's actually, continued to carry more than its weight even in terms of the relative upside. We also have the rest of the asset markets cooperating with this idea of disinflationary, slower but still positive growth. Oil prices, we talked about it earlier, going down this way are probably initially a positive, disinflationary and refreshing buying power among consumers before they start to send a more, I guess, disorderly message about what's going on macro.
Yeah, I mean, let's save some money at the gas pump and maybe it'll be spent on holiday shopping. Who knows? But your point's well taken. Christina Partsinevelos, ARM Holdings. What do we expect?
Well, ARM is expected to post a strong first ever earnings report driven by improved smartphone demand and higher price points for royalties. Recall that ARM's business model is a little bit different from other chip makers since it provides the blueprint to make chips and charges royalties for that blueprint. Since its IPO in September, it's down about, look at that, 15, or you can say ARM, actually, you can see it's like 6%, but it's lower than...
They're going to paint it different. Damn it, Janet. Got to stay above 43.78.
Missing the AI euphoria boat. Over 40% of its revenues come from mobile, 24% come directly from China, which operates as a black box under ARM China. Some are also worried about ARM's architectural or blueprint, as I called it, is under threat from an open source model called RISC-V. Lastly, SoftBank still owns 90% of ARM, so what they do with their shares will affect the stock. But despite all of those investment risks, analysts believe ARM's full-year revenue guidance should come in just a little bit below $3 billion. And it's going to focus on edge computing, or as they say, AI on smartphones, PCs, and local servers, something Qualcomm and Intel really pushed on their earnings calls. ARM is also over the first to update its architecture. It's actually updating its architecture, say, in about a decade. It's the first time it's doing it. So that should provide better computing performance for AI systems. And Rosenblatt and BofA are just two of many analysts that think there's going to be a major upgrade cycle for ARM just in the near term with that new architecture.
All right, good stuff. Covered a lot for us today. We do appreciate that, Christina. Thank you. We'll see you in overtime. Christina Partsinevelos. All right, Julia, what should we expect when Disney reports in a matter of minutes?
Disney. Be interested to see how Disney trades tomorrow. Maybe a play on that. Earnings.
And this is the first time that Disney will report under its new structure, which breaks out towards getting new insight into ESPN. We're looking for an update on streaming and whether the division is still on track for profitability a year from now, and for insight into the ad market. The future of the linear TV business is a question after Disney's battle with Charter, and at the theme parks, we'll see if consumer spending is holding up. Plus, there's the actor strike that is now starting to threaten the summer box office. I will be sitting down with Disney CEO Bob Iger to talk results. That's coming up right after they report, which is right after the bell.
Yep, and we're excited about that. Julia, thank you so much. Julia Borsten, just ahead of the earnings and, of course, that exclusive interview. I mean, you look at Warner Brothers Discovery today, and Paramount, not looking good.
It's not looking good, and it really is interesting because Disney has this sort of makeup where you can decide how much of the company is essentially a Netflix and how much of it is a WBD or Paramount. They obviously have the exposure to the linear networks and the advertising like WBD.
Come on, stay above.
A little more of control over its own destiny, it's seeming, in terms of getting scale, especially once it buys Hulu.
All right, we got 3 minutes to go. 3 minutes to go.
Franchises that you can value as much as you want in the theme park business. It's still going to have, I don't know, $6 billion gain in revenue over the course of this fiscal year versus the last one. So it's not the same story where it feels as if
the traditional pure media companies are really at the mercy of the macro and their own balance sheets and don't have as many options. We'll see what they convey, what either conveys in terms of the degree of urgency.
All right, end of day. We got less than 3 minutes to go. S&P 500 closing right below 4,400 and above 4,378 for now, unless they sell this end of day and paint this differently. Microsoft's starting to push a bit higher off the low of the day. Tesla's hanging in there. Apple's pushing a bit higher. Google's up 90 cents into the close. Netflix up $1.88. Nvidia up $5.62, but off the best levels of the session. Meta, same thing, off the best levels of the session. Amazon is off 66 cents. Broadcom up $13. Nice, nice, nice.
Toward the old highs of 4,800, just because presumably if we got up to 45, 4,600 where we were in the summer, you're going to say, well, full valuations again. Exactly how fast are we going to grow? Are earnings estimates really going to be able to hold? Narrow market, right? Narrow market. It's a narrow market. It hasn't proven that it's broken out of that mode. And so I think if you don't really feel like the train's going to leave and you're not going to be able to catch up with it, it does hold people in reserve. That said, refusal to come in. I mentioned it at the midday that we haven't even gone back to the prior day's low.
All right, less than a minute to go. Closing here would be nice. Would have preferred a nice bullish move, but not expecting it. 4,400 is a major level going into the close. Okay. Okay, so 4,400 major level. Let me see what we have today. All right, we're about to close here. Have a great evening, everyone. Enjoy. Oh, I would have gotten I just closed Thinkorswim right at the last second. I would have got the ding, ding, ding. All right, so ding, ding, ding. We're closed. Okay, 4,400 major level. 43.75. We closed at 43.78 yesterday. Today we're closing 43.82. So right in the middle here. 43.80, 43.85, and 4,400 is a major level. So we need to get, you can see how much call gamma we got to get through. As you ease up towards that call wall, if you will, people will take profits, and that creates supply, which is also resistance. So we need to get above 4,400, either that or get above 4,400 and have 4,400 start to shift to 4,450 and then 4,500. Need to see these peaks grow in size, and this one right here, 4,400, start to drop off. Not the case yet, so we got resistance there until further notice. Have a great evening, everyone. Take care. Enjoy being here with you, giving the play-by-play. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is the closing bell. Wednesday, the 8th of November, here on the East Coast, Myrtle Beach. Beautiful day. Going to go outside and get a breath of fresh air. Take care. We'll see you tomorrow. Ciao.